Good morning, everybody. I hope the audio clarity is good. So we will wait for few more people to join. I hope you all are you all have joined the Telegram channel. Did you check the Telegram channel? I have posted few images today for you to understand in a better manner. Everyone joined, right? No, actually there is some issues with the recording. So I will check how to I will contact my platform provider and then I will try to provide the recording. Okay. So those who have not yet joined the Telegram channel, please check your email and join the Telegram channel. I have shared a few images. Please check those images in Telegram channel. It will help you to understand in a better way. So those are the things I have covered yesterday. I hope you are all able to see my screen. So these are the images which I have posted today. So uh, narrow CPR. So narrow CPR, it is for a trending market, and ascending CPR, it is for a bullish market, and inside CPR is also for a trending market. And white CPR is for a range bound market, descending CPR is for a bearish market, and outside CPR is for a range bound market. Please give me a minute. I will be back. Let us wait for a few other participants. So yes, white CPR is for a range bound market, descending CPR is for a bearish market, and outside CPR is for a range bound market. So both narrow CPR and inside CPR is for a trending market. Okay, both are for a trending market. And both wide CPR and outside CPR both are for a sideways market. I hope you all know that. So, so this one also ascending reversal CPR, I hope you all know. So in a ascending CPR, what happens? The market will be going up. Okay, and suddenly what happens? The market will come down. So this is what we call as a trend reversal CPR. Okay, trend reversal CPR. So here what happens? The candles will be coming down regularly, and all of a sudden the next day the prices will come up. So again, this is a trend reversal. And overlapping CPR, as you can see from the image itself, no, every day CPR is overlapping with each other. So it is a sign of a sideways market. So these are some basics which will help you to understand the some small nuances for that particular day you will be able to understand. See, please check your email. I have from yesterday. I am telling that I have shared everything in email. Okay, more than 70 people have joined. I've joined the Telegram channel. Okay, few people are still saying email did not receive, email did not receive. I have sent an email for more than 10 times. More than 10 times email I have sent. Please check your spam folder, junk folder, all the folders you open and check. Don't ping me again and again. See, if you are not getting emails, then you have to check your email account. Your email account is full. You have to delete the contents in your email, only then you will receive new emails. Everything I cannot come and resolve. Take some responsibility and check your email and try to resolve the issue from your side. You can see here almost 71 people have joined. 71 people have joined. Then what is the issue for the others? I cannot rectify these kind of issues. You have to check your email. I personally sent more than 10 emails to everybody. I did not allow my team to take care of the replying part. I could have easily asked my team to send the email, but I did not ask my team to send the email. I sent the email personally to everybody. So I know very well I have sent the email to all the participants. So you have to check your email ID and you have to check what is the issue, why you are not receiving the email. You have to check from your side. And these entry criteria also we discussed yesterday. So always we have to take a entry above CPR. Okay, so this is for a bullish condition. So above CPR you can enter, above R1 and previous day high you can enter, and above R2 also you can enter. So these are for entries. Okay, all the three conditions are for entry. And target is very easy. When you are entering at CPR, in the first condition, when you are entering at CPR, your target is R1 and previous day high. So this is the target. When you are entering at second condition, your target is R2. When you are entering at third condition, your target is R3. That's all, very simple. So here you will go with the 80% position sizing, 50% position sizing, and 20% position sizing. That's all. This is what I have said yesterday. So those who have not yet joined the Telegram channel, you can just ping me in WhatsApp. Don't ping me in Telegram channel, because my Telegram account is only for Telegram usage, or not for clarifying your queries, or not for providing support. If you have not yet joined the Telegram channel, WhatsApp me. That's all. Just send one WhatsApp. I will check today night or I will check tomorrow. So right now it's time for you all to listen. Okay, so again for short entry, so this is the first condition if the trend is bearish. So the first condition, you can take a shot at CPR. Your target is S1 and previous day low. In the second condition, you can take a shot at S1 and previous day low, and your target is S2. And in the third condition, you can take your shot below S2 and your target is S3. So the position sizing is 80%, 50% and 20%. Clear? So these conditions only I said I want the 2050 to provide support. So that will give me an extra edge, and it helps me to manage my risk effectively. So the 20 should be like this. So if the 20 is like this, then it will be an additional advantage for us. So this is how we need the market. So in a bearish structure, we want the 20 to act as a resistance like this. Okay, very simple. And the 50 also should be parallel. So this is what we covered yesterday. Clear? Stop loss also I have already said. Stop loss is below 20 SMA or below CPR, whichever is earlier. Whichever is first, you can keep it as a stop loss. Okay. So stop loss, whichever comes first, you have to plan it as a stop loss, and you should be very, very strict with your stop loss. Okay, so if a bear candle closes below 20, immediately exit. Okay, immediately you have to exit. If a bear candle closes below 20, immediately exit. So this is your stop loss. So if a bear candle closes below 20, this is your stop loss. Okay. And again, for here, if a bull candle closes above 20, this is your stop loss. Immediately you have to exit. So sometimes there will be a very big candle. No. Sometimes there will be a very big candle. How to escape that big candle? That if you face if you trade regularly, you will automatically find a way to escape. Because what happens? Let's say when you are taking a stop loss in a normal candle. Let's say you are taking a stop loss in a normal candle, and let's say you are losing some 2000 rupee. Now in this type of candle, in live you will be seeing the candles will be moving in live. Slowly the market will be moving on the upside. Your stop loss will be getting hit. And once your stop loss exceeds more than 2000, 2500, you have to exit manually. You don't wait for the candle to form bigger. As soon as you see your MTM is exceeding the normal value. Now, whenever you are taking your stop loss here, maybe you will lose around 2000 to 3000. So here also you will lose around 2000. 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 But here, once your stop loss goes beyond 2500, you should understand something is happening and you have to exit manually. Clear, right? Clear? So that if you take 2-3 trades, or if you take 10 to 15 trades, you will understand automatically. It's not at all a problem. And after hitting your stop loss, if the market is going in your favor, you have to re-enter. It is mandatory. It is mandatory. It is mandatory. So let's say the market is, let's say you are taking a short position here. The 20 is providing resistance. Okay, and you are going for a short. And now your stop loss is hit. Sometimes what happens, the market will consolidate at CPR. It will take resistance at CPR, and again the market will come down like this. So again you have to re-enter. Re-entry. Again you have to re-enter. Re-entering is mandatory. If that also hits your stop loss, then stay away from that particular day. And it depends on your risk management also. So let's say your capital is 10 lakh. So you have to risk only 1% on a single day. So 1% risk will be 10,000. So let's say in your first trade you have lost the trade and you lost 3000 rupee. Second trade also stop loss hit, you lost 3000 rupee. Now again you are getting a re-entry. Let's assume your second re-entry got your stop loss. Now again third time you are getting a re-entry. So first trade also stop loss, second trade also stop loss, third time also you can re-enter because still your risk management is under control, correct? So per day you can take a risk of 1%, which is 10,000 rupee. But in 2 trades you have lost only 6,000. So still you can take the third trade. Understood? Understood, everybody? But if you have lost 5,000 in the first trade, and if you have lost 5,000 in the second trade, then already you have lost 10,000. So you cannot take the third trade. Clear? Clear, everybody? So these are the entry based on the CPR. And again, range bound market, I've already said about we have already discussed the range bound market also. So in a range bound market, again, there are some types. You can see over here the market trades inside R1 and CPR. Here the market trades inside between CPR and S1. The market will trade inside the CPR. So these are the range bound days. So remember, we are directional option sellers. I have already explained yesterday. So we are directional option sellers. So trading in these kind of market is very, very difficult. So you should be very, very careful. Okay. We want the above two conditions only. Above two setups we want. We want the market to be bullish or we want the market to be bearish. But the range bound market is very difficult for us. And again, there is another setup. So in a range bound market, the CPR will be wide. Okay, so the CPR will be wide in a range bound market. So here, the CPR attract candle, what happens? The CPR might be narrow, or the CPR might be wide also, or the CPR might be medium also, no problem. But the important point is the distance between CPR and R1 should be high. Okay, the distance between the CPR and R1 should be high. This distance should be high. Again, the distance between CPR and virgin CPR also, the distance should be high. There should be a bigger distance. Only then when the market is reversing from S1 and previous day low, you can go for a long. So when the market is reversing from R1 and previous day high, you can go for a short. Clear? This mean reversion trade, it happens more frequently. This CPR attract candle strategy, no, this happens more frequently, and that is my favorite setup also. Roughly you can check in your charts. You can open your chart and you can check roughly. Okay, most of the time it happens, and it is easy to make money in those kind of days. Roughly you can open your chart and you can check. Maybe you can check 10 and 11. It is this, the CPR attract candle is my favorite pattern. So look at the distance. This is the distance we want. This is what I sent. The distance between the CPR and the R1 should be very high. So this distance should be high. Clear? Virgin CPR is valid only for the next day. After that, you don't follow that. So, all right. So most of the people have joined the session. We will start for today's session. So before starting today's session, I wanted to teach you one important concept. Okay. So I wanted you to understand that very clearly. So there is two categories of the market. Already we saw yesterday. There is two types of market. One is long term and one is short term, right? So let me write here. So this is a long term market. There is only long term and short term, right? There is no mid term and all. So long term and short term. So in long term, what will be the trend of market? Please answer me. What is the long term trend? So the long-term trend is going to be higher high and higher low, correct? So, which means, please listen carefully, which means the candles will be above CPR. Am I right? The candles will be above CPR. Am I right? Yes or no? Yes or no? So, which means, again, listen carefully, which means 20 SMA will be rising like this and 50 SMA will be going together. So, both 20 and 50 will be looking like a both 20 and 50 will be looking like a railway track. It will be going together. So this is called as a railway track pattern. So you might have seen a railway track, right? So it will be parallel, it will be going together, right? So same way here 20 and 50 together it will be going on the upside, correct? Yes or no? So this is how the long-term trend will be looking like in the charts. Agreed, right? Even if you want, you can check the chart of Nifty. Let's go to Nifty daily chart or weekly chart. Let's check the long-term trend, or even you can check weekly time frame or monthly time frame also to understand what is the long-term trend. So this is the long-term trend. Look at the moving averages. The moving averages 20 and 50 will be rising continuously. Both 20 and 50 will be rising. Okay. And even if you see the CPR, monthly CPR, if you put on the monthly CPR, the candles will be going above the CPR only, correct? So this is the logic for the long-term trend. So you understood very clearly. Now coming to the short term. So in long term, the market will go up only. Even if you check any good quality stock, there are a lot of stocks, Infosys stock. There are a lot of good quality stocks which are there in the market for so many years. Okay, for so even if you look at the monthly charts, you look at this is the long term trend. This is monthly chart of Infosys. This is the long term trend. It is having higher highs, higher lows. And if you look at the moving averages, the 20 and 50 will be going together in a parallel manner. So this is the long term trend. So the long term trend, which I mean is monthly, weekly, and daily chart. So these are the long term. In general, these are the time frames we say as a long term trend: monthly chart, weekly chart, and daily chart. Now come to the short term trend. This is where the challenge is there, because monthly and weekly is easy to understand the trend and it is easy to take a trade. But in short term only we are facing. We are day traders. We are day traders and we are trying to make money using 5 minutes time frame. We are trying to make money using hourly time frame. Okay, so in short term, all the three will happen. In long term, if you see, the trend is only bullish. But in short term, the trend will be bullish, the trend will be bearish, and the trend will be sideways. Correct? The trend will be bullish, the trend will be bearish, and the trend will be sideways. So, when the trend is bullish, you know very well. Ascending CPR, correct? In a bullish trend, you know very well, you will have a ascending CPR. Easy. And in a bearish, you know very well, there will be a descending CPR. Easy, correct? And in ascending CPR, the market will be going higher and higher and higher. And in the descending CPR, the market will be going lower and lower and lower. So this is easy for you. In a short-term trend, if you are in 5 minutes chart, if you are seeing this structure, you will easily trade. In hourly chart, if you are seeing this structure, you will easily trade. And again, you know the structure of 20 and 50 also. The 20 will be rising, the 20 will be falling, right? the 20 will be falling, and the 50 also will be moving in a parallel manner. 50 also moving will be in a parallel manner, correct? And in a sideways, you know very well, in a sideways also, the market will be having a overlapping CPR, no? Or one day there will be ascending, one day there will be descending. So these kind of sideways CPR you can see. And also the market will be having some zigzag structures. No, the candles will go up, it will come down. So this is how Nifty hourly chart is looking like. And the 20 and 50 also will be coiled, and it will be difficult for us to trade. So what I want you to understand is, in a short-term trend, there will be a bullish trend, there will be a bearish trend, and there will be a sideways trend. Now, why I am telling this is, I am going to teach you a very, very important character of the moving averages. I am going to tell you the important character of the moving average. What is that? Let me save this image. So, you all agree that in a short-term trend, in a short term, all the three trends will happen. So how that will happen? So let us try to understand using moving average. So in a short term, 20 will rise, 50 will rise. Now let's say the trend is changing. What happens? 20 will starts falling. Okay, 20 will move slowly, and then 20 will starts falling, and 50 also will turn, and 50 also will start falling. Now, from looking at this structure, you can easily say this is a bull trend and this is a bear trend. This crossover happening, right? This crossover happening, that is where the sideways market mostly happens. The sideways mostly happens. And always the moving averages moves in a structure. Moving averages moves in a pattern. Now, every day what we are doing, just imagine. We are getting up in the morning, we are going to office, we are coming back to home, we are sleeping. Next day, get up, office, come back to home, sleep. Get up, go to office, come back to home, sleep. So we are following a structured life, correct? We are following a structured life. You will have parents, we have parents, we are born, we will have children. Now grandchildren will come, then for them children will come. So this is a structured process, right? Father and mother, then son will become big, he will get married, he will become father and mother, and he will produce a son, and that son will grow, he will become a father and mother, and then he will produce a son. So this is a structure. This happens on and on and on. So same way, moving averages is also having a structure. They will go up, they will come down, they will go up, they will come down, they will go up, they will come down. I'm telling in short term only, because in long term the trend is bullish. So forget about long term. I'm talking about short term. So 2050 will go up, come down, go up, come down, go up, come down. Now, my question is, how the 20 and 50 is going up? How the 20 and 50 are going up? And how the 20 and 50 are coming down? How 2050 are going up and how 2050 are coming down? How? Why is this happening? Suddenly they are going up here. Suddenly they are coming down here. Why that is happening? Why? What is the reason? In short term, why don't the 20 and 50 go up? Or in short term, why don't the 20 and 50 go down alone? Why they are going up, coming down, going up, coming down? It is happening. It is happening because of the 200 SMA. So this is how the 200 SMA will be. So generally, this is the character of 20 and 50. This is the character of 20 and 50. So generally what happens, please remember, I will ask you one question. Are we all born by ourselves? Did we grow by ourselves? Did we study by ourselves? Did we get married by ourselves? Yes or no? You itself born from somewhere. You itself went to school. You itself paid your fees. You itself went to office. You itself got married. Is it how happening? No. We are we are coming from our parents. They are they are growing us. They are giving us good food. They are giving us good education. They are giving us good place to live. Correct? They are seeing a good woman, or they are seeing a good man, and they are getting us married. They are helping us. They are producing us. They are growing us, and they are helping us how to live. Yes or no? So similarly, that is the character of 200 SME. The character of 200 SME is like a parent. It helps. This 20 and 50 is like a children. You can understand, like this 20 and 50 is like a husband and wife. This 20 and 50 is like a husband and wife. They are husband and wife. They are couples. In short, you can understand it as a couples. They are husband and wife. 20 and 50 is like a husband and wife. So this 200 SMA is like a parent. It helps the 20 and 50. It gives the energy. This 200 is giving the energy. It is giving the energy. And with that energy, the 20 and 50 is going up. With that energy only, 20 and 50 is providing support for the candle. Now the 200 SMA is like a transformer. 200 SMA provides energy. 200 SMA is like a parent. 200 SMA is like a transformer. Okay, and 20 and 50 SMA is like a couple. 20 and 50 SMA is like a just like a current post, electric post. So for an electric post, the electricity comes from the transformer. So same way, this 200 is giving energy to the 20 and 50. With that energy only, 20 and 50 are providing support for the candles. I said we have to take an entry when the candles are closer to the 20 SMA. You have to take a short entry when the candles are closer to 20 SMA. Correct? The reason is that is where the candles are getting energy. So this 200 gives energy for the 20 and 50. This 200 SMA gives energy for the 20 and 50. With that 20 and 50 energy, candles are going up. Okay, so 200 gives energy, 2050 gives energy. So in short, you can understand, candles are nothing without the moving averages. Candles are nothing without the fair price. Moving average is nothing but an average price. You all know the simple definition. What is the moving average? It is an average price which is moving as per the prices. It is an average price. Average price, or it's like a nominal price, or it's like a fair price. It's like a nominal price, or it's like a fair price. Correct? 1 kg tomato is 20 rupees. A nominal price you will buy. Suddenly 1 kg tomato is 200 rupees. You will not buy. The cost of one iPhone is 1 lakh rupee. You will buy. Cost of one iPhone is 2 lakh rupee. You will not buy. The cost of a pen is 10 rupee. You will buy. The cost of a pen is 10,000 rupee. You will not buy. So whichever thing you are buying, it is a price. You will buy a 10 lakh rupee car, but we will not buy a 10 crore rupee car. Correct? Yes or no? Yes or no? So whatever thing you see in your life, it is a price. In a normal school, the fees per year for a child will be 50,000 or less than 50,000. But if your child is studying in a very standard school, international school, then the fees will be more than 2 lakh rupee per year, correct? So in day-to-day life, price is very, very important. Yes or no? Yes or no? Please tell me. One milk packet is 30 rupee, 20 rupee or 30 rupee, we will buy. The same milk packet is 200 rupee, 300 rupee, you will not buy. My webinar is 10,000 rupee, you will join. My webinar is 1 lakh rupee, you will not join. So in day-to-day life, price is everything. So you have to understand the candle is nothing but price, guys. Candle is nothing but price. If you see it as a number, you will not understand anything. It will be like a log table. In school, we will have a log table. We will have a log table and we will see which number is matching which degree we will be seeing. If you look at price instead of candle, full of numbers, you will not understand anything. So candle is a representation of price. So every day-to-day life, price is important. That price is determined by the fair price only. Everything should be fair valued. So remember, candles are moving, price are moving based on their average price. Based on their average price. So that is what I am saying. 200 is giving energy for the 20 and 50. 20 and 50 are providing support for the candle or resistance for the candle. And based on that only, prices are moving. So this cyclical process happen again and again and again and again. So what happens now? So this will be 200 SMA. 200 SMA never moves easily. So what happens? The 20 will go up and then it will come down and then it goes up. So what happens to the 50? 50 will go up, it will come down and then it will go up. So again this process repeats. Then 50 will go up and then the 20 will go up. Okay, and again this process repeats. So this is a cyclical process. And again the market will go up and then again the market will go down. So this is a cyclical process which is happening in short term. In long term, the prices are uptrend only. In short term, this happens again and again and again. So let me show you a chart. So in long term, the trend is bullish only. No problem. But in short term, in hourly chart, in 5 minutes chart, see, look at this, what is happening. 20 and 50 are getting energy from the 200. The prices are coming down. And then what's happening? 20 and 50 are crossing. Why 20 and 50 are going towards 200? Because the energy is over. We are putting petrol for our bike. You cannot drive forever. Within 2-3 days, the petrol will be over, and again you have to go to the petrol bunk. So 200 is providing energy for the 20 and 50. With that energy, the 20 and 50 are taking the prices down. Now the 20 and 50 lost energy. No fuel. So here you can assume as a tank full. Okay, and here the tank is going to reserve. And again what you will do? You will go to the petrol bunk once again, and again the 200 is giving energy. Giving energy for the 20 and 50. Now again what happening? 20 and 50 are, now tank is full. Again, once again the tank is full. And now the prices are going up. Clear? Yes or no? Yes or no? Clear? So this is what happens every time in the market. At times these kind of zigzag market happens. Sometimes what happened, the market will come towards the 200 and it stays towards the 200 for a very long time. These kind of market only we should avoid. These are the sideways market we have to avoid. We have to avoid. So ultimately, if you see any particular stock, this process happens in a cyclical manner. So 2050 gets energy from 200, the prices comes down. Then crossover happens, the prices goes. Then again the crossover happens, the prices are coming down. Again after reaching 200 SMA, the candles are getting energy from 200, the prices are going up. Again the energy is over, the prices are coming down. So this cyclical process happens in every instrument. So once you understand this, it will be easy for you to trade. Now, can you understand what's happening in Nifty in this particular area? So this is Nifty 75 minutes chart. So getting energy based on the 20 and 50, you can understand. So if the 20 and 50 are going up, the trend is bullish. If the 20 and 50 are coming down, the trend is bearish. So here the 20 and 50 are getting energy and the 20 and 50 are coming down. The prices are coming down. Now the 20 and 50 are going for a crossover. So again, the prices are going up. Now again, they got the energy. Now again, sometimes what happens, the 2050 getting energy here. And immediately the 20 and 50 are coming down once again towards the 200. You can consider this as a breakdown. You are putting petrol to your bike, but suddenly the tire will get punctured. Again, you have to go to some shop. Correct? Or suddenly the brake wire is very loose. Or suddenly the accelerator cable has cut. What you will do? It is a breakdown, correct? Again, you have to go to the shop. So same way, sometimes the 20 and 50 provides the energy. The 200 provides energy for the 20 and 50. But due to some global market conditions, Russia and Ukraine war, Israel and Iran war, and China and US trade war, and India-Pakistan fight. So because of a lot of global reasons, sometimes the prices fluctuate. Sometimes the prices fluctuate, but that will be a temporary only. That will be a temporary one. Immediately the market will rebound and the market will go up or the market will come down. So based on our 2050 200 SMA logic, again you can see over here. See, look at this area. So getting energy, the market is going up. And again the energy is over. The prices are coming down. Okay. Again the market is going up. So the moment candles break 50 SMA, you can understand the energy is over. So what happens now? So let us take this example. So 200 SMA is providing energy for the 20 and 50, correct? So now what happens, 20 and 50 will act as a resistance and they will take the prices down. Now 20 is having energy, it is pushing down the candles. 50 is having energy, it is pushing down the candles. Now sometimes when 20 energy will be reduced, 20 will lose energy, 50 SMA will lose energy. At times that time what happened? The candles will break 20 and 50 easily. The moment 20 and 50 is broken, you have to understand energy of 20 and 50 is lost. 20 and 50 lost the energy. Now the 20 and 50 will turn any time and it will go towards the 200. You have to understand that. And what happens? Slowly the candles are breaking 20 and 50 again and again and again. And then what happened? The crossover happened within the next few days. The crossover happened within the next few days. So whenever the 20 and 50 are going up and when the 50 is broken, you have to understand crossover can happen anytime. So here also you can see the 20 and 50 are getting energy from the 200. Here 50 SMA is broken. So anytime the market can come down. So here the candles came down and then the market started to go up once again. And here the 20 and 50 did not come towards 200, but almost it is closer to the 200. Almost, look at the distance. This distance is very far, but this distance is very small. So small distance is okay, no problem. Always, at times you should not expect the 20 and 50 to touch 200. Every time the 20 and 50 will not touch 200. Out of 10 setups, maybe 2 setups will not touch the 200 SMA. 2 times, maybe maximum 80% the 20 and 50 will touch the 200. Maybe only the 20% of the time the 20 and 50 will not touch the 200, but still the trend will continue. So this trend continuation you can understand by looking at the 20 SMA providing support. But here you can see 50 SMA is broken. So what you should understand? Trend is going to change. So that is what happened here. Clear, everyone? So look at this particular area. So here the Nifty was going up, 20 and 50 are providing energy, and all of a sudden 50 SMA is broken. So now you should remember 2050 energy is over. 2050 is going to touch 200 SMA. You should remember that. Clear? So this cyclical process happens again and again in the market. Now can you tell me what is the trend in Nifty? The trend is bullish or bearish? Based on the 2050 energy concept. So based on the 2050 energy concept, the 2050 are getting energy from the 200. So right now the 20 and 50 are at the petrol bunk. The 20 and 50 are getting energy from the 200. The 20 and 50 are getting energy from the 200 SMA. Clear, everybody? Clear, everybody? See here, that is what I said. Here 20 and 50 are crossing again and again and again. Why? There are a lot of global factors also, guys. See, imagine yourself going in a bike. If your bike is good, you will keep on going to your destination. Correct? Now let's say I wanted to do a bike ride from Chennai to Bangalore. Okay, let's say I'm going for a bike ride from Chennai to Bangalore. If my bike is good, if my petrol tank is full, I will go easily. But now let's say I am driving a very old bike, a Dappa bike I am driving. Okay, wheel is not proper, the tire is old tire, no grip at all. Okay, there is the chain bracket is very loose. I did not change oil for more than 4-5 years. Okay, so this kind of a old bike, if you are going for a long drive, what will happen? Just imagine yourself. You are going in an old bike. Okay, the tire is not good. The brake wires are not good. Okay, instead of second gear, directly third gear is going. Instead of third gear, directly fourth gear is going. So how you will drive that bike? So similar way, imagine the market is not, in short term, the market is always not smooth like a long term. Only long term will be smooth, it will be going up. But in short term, bullish will happen, bearish will happen, sideways will happen because of lot of factors. FIIs are selling for a very long period. In the month of January, February and March, if you see, FIIs were selling in the Indian market because of the Trump tax tariff policy. No, he was imposing tax, repropriating tax he was putting. So because of that, They were keep on selling the Indian market, and the Indian market came down. Now, right now, Iran and Israel are fighting. So you have to understand global factors are happening. You should not think only 2200, 2200. You should consider the global factors also. For you to understand, I am saying energy concept, everything. Please understand. Please understand, I am telling this 200 giving energy to 2050, 2050 giving energy to candles for you to understand. But technically, in the market, as a subject, everything is happening because of the global scenarios, because of FIIs, DIIs, because of retail investors. Please understand technically. Okay? Okay, everybody? Understood? Clear? Yes. So now I hope you all understood the role of 200 SMA, right? You all you are all clear with the importance of 200 SMA? Clear, right? Yes. So now why we have discussed about the 200 SMA 2050 getting energy. Now let us try to apply that in 5 minutes chart, okay, for option selling. How do you apply in 5 minutes chart? Because this plays the very important role. Now observe this 5 minutes chart for this week from 16th till 20th June. Look at the 2050 200 and tell me, are you able to understand the trend? Yes or no? Varanga. Come. Just carefully observe this chart from 16th June and tell me, are you able to judge the trend? Yes or no? Are Akshay bhai, this is Nifty chart only. Look at the chart properly. Bharati, please understand, guys. Okay, look at this chart. Look at this chart. Are you able to understand what has happened from 16th June? Yes or no? Look at the structure. Look at the movement of 20. Take some minute, guys. Immediately don't answer. Look at the 2050. Look at the candles taking support and resistance. Look at the 2050 approaching the 200. Look at the 2050 turning towards 200, getting energy. Try to understand the 20 and 50 from 16th June in 5 minutes chart Nifty 50. Are you able to understand? Don't think about entry, exit, stop loss. Please don't think about that. Just look at the chart and try to understand. Are you able to judge the movement? You can easily understand how the market is moving slowly. So most probably, I don't want, see, don't try to be right every day. Don't try to be right every day. Even if you are wrong 2 times, no problem. Out of 5 days, are you able to understand 3 days? That is important. So this is what I said. Okay, this happens on and on and on. The 2050 gets energy from 200, and then this is and with that energy only the candles are moving. So here the candles took support at 2050, and here the 20 and 50 got energy, and here the 20 and 50 are providing resistance. Okay, and here temporarily the market faked. So this is what we call as a fake breakout. Okay, a kind of a fake breakout, because there is no proper 2050 structure. There is no proper 2050 structure. Okay, so and then look at the market giving the 20 and 50 getting energy at 200 once again, and the 20 and 50 are providing resistance as far as the energy is there. And again the 20 and 50 lost energy, the candles went up. So this is a zigzag market, expiry day. Okay, so there the market was zigzag, range bound, and then look, 20 and 50 started to move towards the got energy from 200 SMA. Even candles are getting energy from the 200 SMA. In this particular location, you can see even the candles are getting energy from the 200 SMA. So this cyclical process happens. See, in live market, you watch for 2-3 days, only then you will understand, man. See, you are practicing cricket today only, and you want to play for international match. How it will happen? You have to practice. No, understand that basic thing. You are watching now. Try to practice for a few days, and then you will understand how to look at in live market. See, candles are moving because of moving average, or moving average is moving because of candle. See, based on the prices only, moving averages are getting formed. I am not telling you because of moving averages the prices are moving. See, if you want to understand this in a better way, uh, how I can tell this? Where when in our childhood days, our parents will say, don't do any mistake. If you do mistakes, God will punish you. கடவுள் கண்ணை குத்திடுவாரு அப்படின்னு பயம் கட்டுவாங்க. No, if you are doing any mistake, God will come and punish you. So will it happen in reality? No. It is just for us to be disciplined. It is they are saying that only to keep us having fear on God, and we have to do only the good thing. So same way, I am telling you 2050 giving energy, 200 giving energy for you to understand. But actually, the market is moving based on the prices. Prices are moving based on the sentiment of the peoples, because of the emotions of the people, because of the market participants. The prices are moving because of the prices moving. Moving averages are moving. Okay, for you to understand the logic of the setup, I'm telling you in simple words: getting energy, transformer, parents, like that I'm selling you. Understood? On average price, people would like to buy. Okay, on average price, people will like to buy. Okay, people will love to buy at average price, and people will love to sell at a average price. See, if the price is reasonable, let's say you are selling a land. If the price is satisfied for you, then you will sell it. You want to sell a land, and if the price is reasonable, you will sell it. So same way. And you are buying a land. If the prices are reasonable, then you will buy it. So how you will find that it is reasonable? So by looking at the moving averages only. Okay. So this structure happens more frequently in 5 minutes chart, and in every lower time frames, whether it is 25 minutes or whether it is 15 minutes or whether it is 75 minutes, this cyclical behavior of the prices happens. Even you can check in 15 minutes chart or 25 minutes chart. Look at 25 minutes chart. At least now you will understand what is happening. Okay. Let me show you any other beautiful location. Look at this location. Are you able to understand what has happened in this location? In the month of April. So this is 30 minutes time frame. So this is half an hour time frame, 25 minutes. Are you able to understand what has happened in 25 minutes chart of Nifty? Yes or no? You are able to understand how the market is moving. This is how you identify the structure, how the market is moving. So this is why I said you have to buy at the moving averages. Yesterday I said you have to buy at 20 SMA closer to the CPR. See, understand one important thing. Buying at 20 SMA itself is a fair price only. But I am asking you to buy at CPR also. So just look at how high probable we are focusing to take our trades. Okay. R1 is also fine. See, taking a trade is CPR is also good. Taking a trade at R1 is also good if the 20 is near. Taking a trade at R1 is also good if the 20 SMA is near. Clear, everybody? So that's why we are filtering the trade. We are giving two conditions, then only we are entering. 20 SMA and CPR. CPR R1, R2. So that condition, I have already posted in the Telegram channel. Now let us come to 5 minutes chart. So how do you take a trade in 5 minutes chart as an intraday trader, as an option buyer, as an option seller? So if you are an option buyer, you know how to take a trade. So let me tell option buying first, and then let me come to option selling so that you will understand very easily. So now on Friday, let me take Friday, yesterday, as an option buyer, where you will take a trade. Maybe let us open that image also. Let me open this image. On Friday, we got this particular setup. Correct? We got an entry above R1 and previous day high. Correct? Yes or no? So I want the 20 and 50 SMA to be like this. I want the 20 SMA like this. I want the 50 SMA like this. Only then I will deploy 80% of my capital. If the setup is not like this, then I am going to deploy less than. If the setup is not like this, then I am going to deploy less than 50%. Now come to Friday's chart and try to see. So where you can take a trade? We can take a trade above R1 and previous day high. So this is my location. I can take a trade anywhere in this location. But my 20 and 50 is not closer to the CPR. It is not closer to the candle. So now what I will do? Can I take a trade? Can I take a trade? If yes, what should be the capital allocation? How much percentage I should take a trade? Already I have answered. Yes. So you itself said, that's all. You itself said, yes, we can take a trade and I have to deploy 50% of my capital. That's all. Very simple. So you are going to buy at the money call option. So what is the strike price here? Look at the R1. R1 is around 24,850 levels. So which call option you will buy? An option buyer should buy at the money or in the money. So you can buy 24,800 call option. Clear? Clear everybody? So you are buying 24,800 call option. Your target is going to be R2. Very simple. Option buying logic you understood? Yes. Now, and stop loss you know very well. A bear candle closing below R1, that is going to be your stop loss. Bear candle below R1 is your stop loss. Please remember, you have to take a entry in this bull candle. You are afraid to take a entry and you are taking a late entry. What happens? Your stop loss will be hit. Okay, you have to exit in the next candle because you are buying at an expensive price. Rule is a rule. If you want to buy above R1, you have to buy above R1 immediately. You should not wait for one more candle, two more candle, back to retracement, pullback. Don't tell these kind of reasons. If you want to, if I say enter above R1, you have to enter above R1 sharply. Because this is live market, this is 5 minutes chart, you have to be very quick. Okay, if you are afraid and if you are buying, you are waiting for one more candle, two more candle, five more candle, keep waiting, you will lose money. So the entry should be precise. Entry should be quick. Yes, when this candle, when this bull candle is going to close, the last 10 seconds, immediately you have to punch your order. This candle opens at 9:40 and it closes at 9:45. This 5 minutes candle opens at 9:40, it closes at 9:45. Okay, don't take any trade in between. Wait for 9. This candle opens at 9:40. Okay, and this candle closes at 9:45. Your entry should be at 9:44 minutes 50 seconds. This 10 seconds you have to punch your order. Understood? This 10 seconds you have to punch your order. If you are waiting for one more candle, then that's all. You will buy at an expensive price. This is what I am saying. You have to buy exactly at the entry point. So look at this image once again. This CPR is a fair price. This R1 is a fair price. This R2 is a fair price. According to CPR. According to the CPR. So you have to buy at the fair price. You are buying at expensive price, then definitely when the market comes down, you will be in a huge loss. Now let's say I would have taken an entry in this candle. In this bull candle, I would have taken an entry. Let me change the color. So let's say I have taken entry in this bull candle. Okay. Now in this bear candle, I will not be in a loss. But you are entering in this bull candle, you will be in a loss. So that will create fear. Okay, that will create fear, that will create a lot of emotional influence, and you will lose the trade. So please be very, very careful with your entry. I have given even the image, so please be careful. Follow that image and trade. So option buying logic is clear. Now let me come to option selling. Option buying logic is clear? Yes? Please tell me a quick yes. We will proceed further. See, those who want me to repeat once again, please check the recording later. Okay. Because my battery is going down. The more I explain, the more I talk, my energy is also going. So I cannot explain again and again and again. If you did not understand, please don't worry. Check the recording later. 100 times also you can check the recording. Okay. So option buying logic is clear. Now in option selling, always remember we have to sell OTM option. Okay. For option buying, you will buy at the money strike price and you will buy in the money strike price. But for option selling, we will do deep OTM strike price only. Because only in deep OTM, premium decay will be there. That is one reason. Premium decay will be there. That is one reason. And another reason is if the market gives a small spike against us, like this, if you are seeing a bear candle, one or two bear candles, what happens? The premium will not increase. Okay, premium will not increase. Premium decay will happen once the market goes against us sharply. This premium will not increase. It will not have the strength to increase. That's why we are choosing deep OTM. Now somebody, what they will say is, I have seen my friends asking this question. Okay, when I used to sell options, my friends used to sit in front of me and they used to trade along with me. They used to ask, why don't we sell 24,800 put option? Why don't we sell 25,800 put option? Let us say, why are you selling 24,500 put option? Why are you selling? Why are you selling 24,500 put? Sell 24,800 put option because the market will not go below 24,800. See, the market will not go below 24,800, but the premiums will increase. In a single bear candle, the premium will jump. And ultimately, what happens? Your stop loss will be hit in option selling. But when you are selling 24,500 put, the premiums will not jump. The premiums will not increase. Deep OTM means how much OTM I will tell. Please wait. The webinar is not yet over. Just now I started option selling. Don't ask 100 questions right now. Just now I am getting started, okay? So please understand, for option buying, at the money, in the money. For option selling, deep OTM. Okay, now which strike price I should select for deep OTM? We have to select the strike price based on this moving averages and based on the CPR. For example, this is 24,850. As a buyer, I am buying 24,800. Now, you are selling options. Selling option is always risky. Option selling is risky. So, we have to be on the safer side. So, we are selling deep OTM. Now, how to select that strike price? Now, in this three moving average, which moving average is at the bottom? 50 moving average is at the bottom. 50 SMA is at the bottom. So, you can select a strike price based on this 50 SMA. So probably, again, it will come probably around 24.8. See, this is for an example. Immediately don't conclude. Please wait. So this 50 SMA is around 24,800. So I know very well market will not go below 24,800. This is selecting a strike price based on moving averages. Now, based on CPR also, you can select a strike price. Now, the market is above R1 and previous day high. So, the market is bullish. The market is bullish. So, I know very well the market will not come below CPR. The chances of the market coming below CPR is very, very less. So, I can select a strike price based on CPR also. So again, CPR is around 24,794. So again, it will come around to 24,800 only. So what you can do on, this is Friday. Friday, we are not going to sell options. So generally what you can do, you can select a strike price. If the premium is good, you can select 24,700 strike price also. The more deep you sell, it is good. The more deep you sell, it is good. Now, now let me show you my trade which I took on Thursday. Okay, on expiry day. Let me open that chart. One minute. Let me open that chart. I saved it. I will show my trade on Thursday expiry day so that you will understand better. Because Friday, it is good for option buying. One minute. Let me open the chart. So what I will do, I will send this image in Telegram also, so that you can also see later. Okay. Please try to listen very carefully, because if you understand one example, it will be easy for you to follow the other examples. Okay. You will not have any doubts. So let me come back to the chart. Let me open the chart for you. So I have saved the options chart because it will disappear in the broker terminal. Spot chart we can see in trading view, no problem. But this options chart, it will disappear. So I have saved the chart also. Now look at the Thursday expiry. Now Thursday, tell me what is the trend based on CPR. Based on CPR, tell me the trend on Thursday. Candles are above CPR or below CPR? Downtrend. Okay. So, when you will, so the trend is bearish. So I know very well the market will not come above CPR, correct? I know very well the market will not come above CPR. So I can select a strike price based on CPR. This is what I said. You can select a strike price based on CPR. Now let me switch off the CPR. Now try to understand the moving average trend. What is the trend based on the moving averages? Remember, 2050 getting energy and going above 200 is bullish. Correct? See, let's say for example, see, this is a bullish trend. 2050 getting energy and going above 200, candles going above 200, that is a bullish trend. Okay, that is a bullish trend. But 2050 going up, candles going up below 200, it is not a bullish trend. It is a recovery. Market is recovering. Okay, this is not a bullish trend, it is a recovery. Clear? So, based on this logic, please tell me what is the trend on Thursday? Candles are below 200. See, you no need to think like the market is zigzag, the market is in the morning, the market is below 200 SMA. Maybe let me come here. See here. Maybe you can come here. See here. Look at this area. Look at this area. So on Thursday, when I am sitting in front of the screen, I know very well the candles are taking resistance at 200. I will trust the bulls. Remember, I will trust the bulls above 200 SMA only, correct? So 200 SMA is like this. I want the candles to go above 200. I want the candles to go above 200 SMA. I want the 20 SMA to support. I want the 50 SMA to come together. Only then I will trust the bulls. You got it right? You got it right? I've already said candles are not having energy. Candles will get energy from 2050 and then only the candles will go up. So for me to trust the bulls, I need a bull candle above 200. I want the 20 to support the candle. Understood? Understood, right? So here the candles are not at all interested in going above 200 SMA. You can see here. In the next 2-3 candles, you can understand the chances of the candle to go above 200 is very less. I am telling, I am going to become the number one richest man in the world. Will you believe? Or will you believe once I become the richest person in the world? Which one you will believe? I am saying I will become the richest person in the world. I am saying, will you believe that, or will you believe once I become a richest person in the world? Once I prove myself, you will believe. Correct? Once I prove myself, you will believe. So the candle should prove the trend by going up. I need the bull candle above 200. Only then I will trust. Now what happened on Friday? Look at Friday. The candles proved. The candles traded above R1 and previous day high. The candles proved the strength. Candles were staying above R1 and previous day high, and the bulls were proving the trend. They are proving that we are having energy. They stayed above previous day high. They did not come below previous day high. Got it? But here on Thursday, the candles did not go above 200 SMA. So the bears are telling us still I am having energy. I will not allow the prices to go up. The bears are telling this information to you. That you will understand in live market when you are seeing the continuous candles, the next candles, once the market is forming slowly, you will understand that. Clear? It is not easy to understand in a single day, but try to understand what I'm saying. Try to understand, keep it in your mind. It is not easy to follow from day one. Okay, so now combine moving average and CPR together. Now my thought process is going above 200 is difficult. Going above CPR is also difficult. So put together, I'm going to sell call option in that strike price. So above 200 SMA and above 200 SMA and above CPR, whichever strike price is there, I'm ready to sell. I'm ready to sell call option. Clear, everybody? Clear? So when you are selling option, when you are selling a call option, or when you are selling a put option, first you have to know where the market is going, where the market will not go. The market will go down. I know very well. The market will go down. The market is bearish, I know. And I know the market will not go above 200. I know the market is bearish because below CPR and below 200 SMA. I know the market will not go above 200. Understood? The market will not go above 200. The market is bearish because the market is below CPR. Understood or not? So you should know both the conditions, and then only you have to select the strike price. So on this expiry day, I know the market will not go above 200. I know the market will not go above daily CPR. So I am selecting that strike price 24,850. In the morning, I was selling 24,850 call option. You can check the image in the group. I can also share that. So in the morning, what I did, I was selling 24,850 call option. Okay. And now when you are selling options, please remember you have to wait till 10 o'clock, 10:30, 11 o'clock. At times you have to take your first trade after 11 o'clock only. There are many because on a expiry day, judging the market in the first 1 hour, 1.5 hours is very difficult. Now let's say, for example, on Thursday, when I was sitting in this, when I was trading on this expiry, so this is how on Thursday expiry I was seeing the candle. What I thought, actually, I thought this is a strong bull candle. The candles are taking support at 20. I thought 20 will get energy from 200. This is what I thought in live market. I thought the 50 will go up and I was expecting the market to reach R1. I thought this will happen. And I thought the market will consolidate around R1 and previous day high. And I thought the market will expire around 25,000, I thought. Because that is a round off level. I thought the market will happen. This will happen in the market I was expecting. Because in the first 1 hour, 1.5 hours, trying to understand the trend is very, very difficult. See, on expiry day, you can sell odd strike prices, no problem. On expiry day, you can select 50 strikes also, no problem, because the premium will not be there. If you are waiting for 100 strikes on expiry day, the premium will not be there. So on expiry day, you can select 50 strikes. Okay. So this was my understanding in live market in Nifty in this particular bull candle. So what you have to do is, when you are doing option selling, please don't jump like a, see, only scalpers will jump into the trade immediately. Let's say you are doing scalping, 1 minute chart, 2 minutes chart, or 3 minutes chart. You are a scalper. You are going to sit in the trade for 1 or 2 minutes only. Only a scalper will jump into the trade. We are going to do option selling. So the first 1 hour, 1.5 hours, most of the days it is difficult to understand the trend. So sometimes you will think the market will go up and the market will be bullish. So let's say I am bullish and I'm selling put option. Let's say I'm selling put option below 50 SMA. I'm selling put option below 50 SMA, or I'm selling put option at previous day low. What happens? My stop loss will be hit. The market is coming down and my stop loss will be hit. That's all. Understood, right? My stop loss will be hit. So don't jump into a trade immediately. Don't jump into a trade in the first 1 hour, 1.5 hours. Give more time for the candle. On this expiry day, what I did, I went for a shot at the 20 SMA only. Look at this option strike price. So in all these areas, till 12 o'clock, I was not taking any trade. Till 12 o'clock, I was not taking any trade because even in spot chart, it was difficult for me to understand who is having the trend and power. But by the time the moving averages become flat, the moving averages are getting flat, the candles are not ready to go above CPR and 200 SMA. So this entire area, CPR plus 200, both are acting as a resistance. So after 11 o'clock, 11:30 only, the trend slowly you will understand. Okay, the market is struggling to go. So now we can enter. So this is what I did. At 12 o'clock, what happened? The prices were coming towards the 20 SMA in options chart. This is why I said you have to look options chart also. Okay. When you are an option seller, compulsory you have to look at options chart. There is no other option. You are an option buyer. You are not looking at options chart. Okay, I will not say anything. But you are an option seller. If you are not looking at options chart, you should not take any position. You have to look at the spot chart. You have to look at the options chart also, because options chart is very, very important to plan your stop loss. And also it is important to plan your entry. So at 12 o'clock only I took this entry. I know I was very strong that the market will not go below the market will not go above 200 SMA. I was very confident and I went for a shot at this strike price around 10 rupees. Around 10 rupees I went for a shot. Now, when you are taking this short position, now you are an option seller. Okay, you are an option seller. You are selling the strike price. Now forget about the price. Forget about the price. Okay, don't forget about the price. Technically, you are going for a short. You are going for a short here. Where you will place your stop loss? Where will you place your stop loss? Yes, Harsh, your correct answer. I am asking the location. See, not S1, guys. Look at, see, I'm not asking the price. Just now I said, Priyesh, Raghavan, I said, don't look at the price. Don't look at the price. Forget the price. Forget the price. Look at the setup. In this bear candle, you are going for a short. My stop loss is any bull candle above 20 SMA. Any bull candle above 20 SMA is going to be my stop loss. So what I will do, I'm taking a short position in this bear candle. What I can do, I can place my stop loss somewhere around 15 rupees, 15, 16 rupees. I can place my stop loss. So just 5 rupees risk. I can place my stop loss at 15, 16 rupees. Correct? 5 rupees risk only. I'm taking a shot around 10 rupees. My stop loss is just 5 rupees. Got it? Guys, see, please understand, we will be taking 100 lots. Don't think, sir, we are selling 10 rupees. Is that sufficient? 5 rupees we are booking profit. 5 rupees is enough or not? See, we are trading 100 lots. You have to think in that way. We are looking at our capital in terms of percentage. See, if you are having a mindset like, I want to make 1,000 rupee every day, I want to make 10,000 rupee every day, then you will not become profitable. My capital is this much rupee. I want to make 0.5 percentage in a week. I want to make 1% in a week. Then only you will become a profitable trader. So when I'm selling this option, two things I'm doing. I'm checking the trend and I'm selecting my strike price accordingly. And I'm selling the option and I'm placing my stop loss as per the technicals only. As per the trend, I'm taking my trade. As per the trend, I'm placing my stop loss. Clear, everybody? See, the same logic which we studied so far. Clear? Now, if you look at the chart, see, look at the trend between 12 to 3. So I am taking a trade at 12 o'clock. I am taking a trade at 12 o'clock and look at the trend for this 1 hour. Easily premium decay has happened. Okay. I'm selling at 10 o'clock. I'm selling at 10 rupee and I'm booking at 3 rupees. Okay. Easily I got 7 rupees in this trade. Now look at the spot chart. I want you all to look at the spot chart. Look at the spot chart for that particular 1 hour. So from here to here, from 12 o'clock to 1 o'clock, this 1 hour, the market is sideways. Can you see? The market is sideways. The market is sideways. So I got premium decay easily in the options chart because it is a expiry day. So are you clear how I am selecting the strike price? Yes or no? Yes or no? All right. I hope you're all clear. So in this trade, in the first trade, I always never sit for the option to become zero. That is my mindset. That is my mindset. I never sit in this trade until it becomes zero. I will not sit like that. Once I take a certain percentage in this particular trade, I used to exit. Let's say in this trade, I easily got 0.5 percentage on my deployed capital. I easily got 0.5 percentage on my deployed capital. So obviously what I will do, I will exit and I will wait for the opportunity, because the remaining 3 rupees is not at all a matter. Here itself, here I got 7 points and I got 0.5 percentage on my capital. This 3 points is not at all a big deal for me. So there is no point in waiting for that 3 rupees. So I exited this trade, and what I did, I was waiting for the second trade. So the second trade I got in the 24,800 call option. That's why I have sent that chart also. So look at the 24,800 call options chart. After 2:30, we got a spike. Look at 24,800. So once I closed my position around 1 o'clock, I did not go for a short at 24,800 call option, because at that time the market was moving exactly at that particular area. See here, the market is very much closer to 24,800. So right now this 24,850 call option is decayed. So now I want to go to 24,800 call option. If I want to select 24,800 call option, then prices should not go above 24,800. The prices should stay below 20 and 50 SMA. That is the criteria. So I was waiting to select a strike price of 24,800. Now can you see this spike? Now can you see the spike? Now during this spike, look at this 24,850 call option. During this spike, look at this 24,850 call option. It gave a spike, and in the same candle it came down immediately. So there is no room for me to make money. See, during that spike, if I am planning to take a short position in this 24,850 call option, look at this candle. I need to wait for the candle to come below 20 SMA, and if I am taking a short at 20 SMA, again it is having 3 rupee only. Understood? Understood? Again it is at 3 rupee only, so I cannot take a short position for 3 rupee. Clear? So I am waiting for 24,800 call option only. I am waiting for 24,800 call option only. Now see what happened after 2 o'clock and 2:30. See what happened. So this is what happened. As an option seller, please make sure you book your profit in the afternoon. Okay, maximum profit you should be booking in the afternoon. And because you all know very well, at later part of the day, spike can happen anytime. Mostly spike injection candles will form, spikes will be there, stop loss hunting will be there. So the majority of your profits you should have made in the mid of the day. You should not depend on the end of the day. You should be depending on the mid of the day, because that's where the market will be range bound and you can make maximum profit out of it. Now, exactly after 2:30, when this particular candle came below 20 and 50 SMA, I was very confident the market will come down towards today low. Okay, market will come down towards today low. This was my understanding, because the market is rejecting this CPR and 200 SMA zone once again. This 24,850, the market is rejecting this resistance zone once again. So there are higher chances, because the market is in a range. The market should come and test the day low. So now what I did, I went for a short position below 20 SMA in this 24,800 call option. I was shorting for somewhere around 13-14 rupees. Okay, somewhere around 13-14 rupees, I was going for a short. Now again, my stop loss will be above 20 SMA. Any bull candle above 20 SMA should be my stop loss. Okay, so probably I can plan for 25 points. 25 should be my stop loss. It should be ideal. 25 to 30 should be my stop loss. I am selling this option for somewhere around 14 rupees, 13-14 rupees. My stop loss is above this 20 SMA. Okay, clear about the entry? Looking at the options chart and looking at the spot chart together and taking an entry and selecting the strike price. This is the recent example, the expiry day. By the time the market reached this level, I exited my trade. I never wait for the market to become zero. If I am getting 0.5%, I am happy, I will exit. And when the candle comes down slowly, you can reduce your stop loss also. So please don't think I am entering at 14 rupees. I am placing my stop loss at 25-30 rupees. Okay, so don't think like that. Once the candles goes in our favor, we will be bringing down our stop loss slowly. Okay, and again I closed this trade around 7 rupees. Around 7-6 rupees I exited this trade. So on Thursday, easily made 1%. If you observe carefully, I am not a non-directional trader on Thursday. On Thursday, anybody, if you ask any option seller on Thursday, what they will say, no, the market is range bound, the market is sideways. So everybody would have gone for non-directional. Everybody would have gone for non-directional. But if you look at my trade, I am confident that it will not go above 200, because CPR is also there. So we have to select the strike price accordingly. Now, why I selected 24,850 call option? In the morning, I selected 24,850 call option because look at the options chart. The 24,850 call option itself is at 10 rupee only. The 24,850 call option itself is at 10 rupee only. If you are selecting 24,900 call option, it will be at 4 rupees or 3 rupees. Clear everyone? Clear everyone? On expiry day, you have to select the strike price which is closer and which is having some 10-15 rupee. That should be a stop loss. But that should be our entry premium. Clear? Clear everyone? Can you please confirm you understood this expiry trade? I will show my Sensex expiry trade also. So saving the chart. Clear everyone? Can you please post it in the chat box? But if you look at, see, on expiry days only we will select a strike price which is closer. But if you check Friday, Let's check Friday and see the CPR. CPR is around 24,800. Look at 24,800 put option. Still it is at 64 rupees. See, right now the market is at 25,000. Correct? Right now the market is at 25,000. The chances of coming below CPR is very less. But look at the premium. Premium is at 64 rupees. So on non-expiry days, we have to select a strike price which is far away. Probably you have to select a strike price which is below previous day low. So 24,700 should be the right strike price. 24,700 should be the ideal strike price if you are going for option selling. But again, if you see, the premiums will not increase. The premiums will not, the premiums will not decrease. The premium decay will not happen. Now on Friday, I will show you one example. On Friday, where is your entry? On Friday, where is your entry? Which candle? On Friday, our entry is at 940 candle, correct? So this 940 candle is our entry. 940 candle is our entry. I said on Friday, you have to be an option buyer. Now look at the premium. So at 940 candle, I'm going for a call option, 24,800 call option. So let us look at 940 candle. So 940 candle is here. Okay. So I am buying this call option at 210 rupees or 211 rupees. So at 940, I am buying this option around 210 or 215 rupees. Now see how much it has given a rally. How much it has given a rally. From 210, it is trading at 365, correct? From 210, it is trading at almost 380, it is trading. But same area, if you see 940 candle, where is 940 candle? So here is the 940 candle. Same area, look at 940 candle. Let's say you are selling at 90 rupees. Look at the price. Right now it is at 50 rupee. So how much decay you got? How much decay you got? Hardly you got 40 points. But here how much points you got? From 200 to 380. Almost you got 150 plus points. So you understood why you should be an option buyer on Friday. Clear, everybody? So that's why I said on Friday be an option buyer, don't be an option seller. So this is how you have to select the strike price. You have to sell that particular option. And again, for margin benefit, you have to buy an option. I hope you all know that very well. Let's say, for example, you are selling 24,850 call option. 24,850 call option you are selling. 24,850 call option you are selling at 10 rupee. Okay. To get the margin benefit, you have to buy any option, any D podium option, probably 24 500 or 400. Sorry, 24 25 200 or 300. So probably you can buy 25 200 call option. Some 1 rupee 2 rupee option you can buy as a hedge. Okay, for hedge, so that you will get the margin benefit. And please remember, you have to place your stop loss. It is mandatory. You have to place your stop loss. Otherwise, you will lose a huge money. So always, any day, if you are selling option, not only expiry day, let's say you are selling options on Wednesday, you are selling options on Wednesday, or you are selling options on Monday or Tuesday, try to buy a hedge for less than 5 rupee. Less than 5 rupee hedge is enough. Only for margin benefit. Only for margin benefit. Don't buy hedge 300 strikes away, 500 strikes away. Don't select strikes like that. Select a strike price which is less than 5 rupee. Now on Wednesday, you can check in your broker terminal. Okay, you can check in your broker terminal how much you need for margin. Okay, let's say you are selling 25,000 put option and you are buying 24,500 put option. Okay, so you can check your margin requirement. Here you can check. Okay, so you need around 75,000, roughly around 75-80,000 you need. Okay, if you are not adding that edge, then you need triple the money. Okay, you need 2 lakh rupee, but if you buy the hedge, you just need 70,000. Okay, so let us look at more examples. Now on expiry day, I wanted to talk about one important concept. On expiry days, this OA statistics helps you very, 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 very much. It is like a friend. It's like a companion. Let me show you. Let me go to historical and let me show you Thursday expiry. So this is Thursday. Okay. This is Thursday expiry. And the time is, I took a position around 12 o'clock. So yes, around 12 o'clock, 12:15. Let me check the time. 12, uh, 12:15, 12:10. Okay. Uh, so so this is my Fire's Insta options terminal. So you can this greatly helps in while you are selling options, especially on expiry day, because it will tell you where most of the people are sitting. So you can check here on the expiry day, 19th expiry day, around 12:10 p.m. See, many people have sold put option at 24,800. Many people have sold put option at 24,800. And on the call side, you can see many people have sold the 24,850 call option. So I was sitting at 24,850 call option only. So you can see this is 24,800, this is 24,900, and this is 24,850. So green means call option sellers. So green is call sellers and red is put sellers. So at 12:10 you can see the highest call option has been sold at 24,850. So I'm also, as per technicals, we are also selecting 24,850 call option as per technicals. So this also helps you that more people have sold 24,850. So the chances of the prices to go above 24,850 is less. Chances of the market to go above 24,850 is less. Even if you check at even if you check the 245, that spike which has happened, So here you can see around 230. Again, the call option sellers were high only. The call option sellers did not escape. The call option sellers were high. Let me check at 230. See this. So this is at 220. 220 where the spike has happened. The 220 when the market went towards 200 SMA and again the market came down. If you look at 220, 230, no, still the option sellers were high at 24,850 only. Can you see? Look at 24,850. More call sellers are there. By looking at the color itself, you can identify. Call options were selling more at 24,850 only. Even if you check 230, again the call options were more at 850 call option only. See, call option sellers were more at 24,850 only. Can you see? So it will help you. It will help you to understand where the market is, where the market will not go. So you have to combine the technical as well as the OA statistics to understand the trend in a better way. So we are also having a belief that the market will not go above 24,850 because CPR is there. So this OA is also telling the same logic. Market will not go above 24,850. Then you can, it will give you an uh, additional additional edge and confidence to sit in the trade. Clear? Clear, everybody? On Wednesday, I was selling call options once the prices came below 200, 20, 50 SMA and CPR. So on Wednesday, obviously Sensex expiry is over. We are going to trade in Sensex expiry only on Tuesday. After that, don't touch Sensex because Sensex, it hits your stop loss most of the time. So other days, every day you can trade in Nifty, no problem. On Wednesday, I was selling call options in Nifty and I was sitting in Nifty trade. I started selling call options in Nifty because it came below CPR and it was below all the three moving averages. So now how to select a strike price? The first thing what you have to decide is when the market is below CPR, when the market is below CPR and 200 SMA, I am very confident that the market will not break today's high, correct? So this particular zone is today's high. So I am very confident that the market will not go above 24,500, 24,900. Clear? So this is how you have to select your strike price. So I am ready to sell call option between 24,900 to 25,000. 24,900 call I can sell, 24,950 call also I can sell, and 25,000 call also I can sell. So these three strike prices are good for selling. Clear? Clear, everybody? Clear? I think I have Offstra subscription. Let me check Offstra. Let me check, I'm having an Offstra subscription. If I'm having Offstra subscription, I can show you the backtesting part. Yes, I have. Choose simulator. So yes, let me show you. So let me go to Wednesday. So this is Wednesday, and the premiums, the market was breaking the market was breaking 200 SMA around. Can you tell me the time? Around 10:45, 10:50, 11. The market was breaking the uh, 10:45, 11. Yes. So see this. I hope, how many of you have used Opstra? How many of you have used Opstra? How many of you don't know how to use Opstra? Okay, so those who don't know, it's not an issue. So it's you can check you can go back and you can back test how it is working. So this is Nifty. This is 19th expiry. I have selected Wednesday, and I have gone to this particular time, 11 o'clock. So at 11 o'clock, the spot price was around 24,837. So you can cross check in the spot chart also. So we were sitting here around 11 o'clock. So the market was trading around 24,850 levels, correct? 24,850 levels the market was trading. Now you have to, how you should select a strike price. As I said earlier, the market is below all the three moving average. The market is below CPR. So the chances of the market to go above today high, the chances of the market to go above previous day high is very, very less. So you can select a strike price which is above today high, and you can also select previous day high as a strike price. So if I am selecting previous day high as a strike price, 25,000 call option, I can go for selling. Okay, 25,000 call option, I can go for a selling. So now let me come to Opstra. So what I'm going to do, I'm going to sell 25,000 call option. So here is 25,000 call option. So it is trading around 29 rupee. Can you see? It is trading around 29 rupee, and you can go for a selling. So let me sell one lot of 25,000 call option. Now you can buy any hedge which is less than 5 rupee. So let me buy 25,300 call option as a hedge. Okay. Which is around 3.9 rupee, or even you can buy 25,500 strike price also, because it is just a hedge. Okay. So I am buying. Okay. Now you can see here. Okay. How much profit you will make and how much loss you will make. What is the break even? Now I wanted to tell an important point. Please remember, don't be afraid of looking at the maximum loss. Okay. Don't be afraid of looking at the maximum loss, because we are going to now we are going to exit based on the candles only. Now let's say, see, please answer me. This is a very important question. Market is below below moving averages and CPR. So I am having a bearish view. So I am going for selling at 25,000 call option. Okay. Now, what is my stop loss? What is my stop loss? If a bull candle comes, now technically if you see, if a bull candle comes above 200 SMA, I can exit. If a bull candle comes above CPR, I can exit. Technically, above CPR, I can exit. I can book my stop loss. Above CPR, I can book my stop loss. Above 200 SMA, I can book my stop loss. Correct? Understood, right? Yes, bull candle above. But please remember, I will go to action replay. In this particular area, I am planning to sell call option. In this particular location, I am planning to sell call option. Now I cannot keep my stop loss above CPR because it will be very big. I cannot keep my stop loss above 20 because it will be very big. So I have to plan my stop loss above 200 SMA. Got it? So always choose a stop loss which is nearby. Always choose a stop loss which is nearby. So I don't want a bigger stop loss. I want a smaller stop loss only. So I am selling 25,000 call option. Though I am selling a 25,000 call option, I will exit in spot chart. If I am seeing a bull candle like this, then I will exit. Clear? Understood, right? Clear, guys? So why I am telling this is, don't be afraid of looking at maximum loss. You are looking at the maximum loss as 35,000. Don't be afraid. If we see a small bull candle in spot, we will exit the entire position. Okay, and you can see over here till 3:30 the market was coming down, and the market was not going up till 3:30. So if you see in this particular trade, no, till 3, let me run till 3:30. So this is how this is the profit you make at the end of the day. This is the profit you make at the end of the day, which is almost the margin required is around 80,000 for one lot. So you are making roughly more than 0.5 percentage. Got it? I hope you understood. Please don't look at this and say, sir, I'm making only 600 rupees profit. Please don't think like that. Okay. For one lot, you need 80,000. Okay. So if you want to make 1% out of this 80,000, you need to make 800 rupees profit. Okay. For 1%. Okay. So here you are getting 600, which is more than half a percent. Clear, everybody? See, Darshan is asking a very important question. In the first 15 minutes, the market is bullish. How to avoid that? That is what I said. In the first 1 hour, 1.5 hours, please don't sell options. Wait for the market. Wait for our setup to form. You have to put a stop loss. Yes, it's compulsory. In the selling leg, you have to put the stop loss. Wait for first 1 hour, 1 hour. See, try to sell options after 10:30 because you have to give more time for the market to react. See, in white CPR also you can sell options. Just decide whether the market will in a white CPR, if the market is between CPR and R1, you can sell put option. If the market is between CPR and S1, you can sell call option. See, this is the very simplest method of option selling, and easily you can make 3 to 4% in a month. If I am able to make, definitely you also can make. Let me show you an image. So in a bullish trend, easily you will sell call options, right? You will sell put options, right? Put options you will be selling. In a bearish trend, you will be selling call options. Okay. Now in range bound market, okay, in range bound market, how do you decide? Don't avoid taking trade. You have to trade because range bound market is also favorable for us. So if the market is stuck between CPR and R1, you can sell put option. You can sell put option preferably if the candles are above moving averages. If the candle is above 20, if the candles are above 20, 50 and 200, then preferably you can sell put option. But in case if the moving averages are above, okay, if the moving averages are above 20 is like this, 50 is like this, and the 200 is like this, then you have to sell call options. So that's why I said strike price selection is based on moving averages as well as based on CPR. Understood? Understood, everybody? If the 20 and 50 is like this and 200 is like this, then sell put option. See, Harsh is asking, no need to look at hourly chart, he is asking. See, hourly chart, definitely you have to see. Okay, hourly chart, definitely you have to see. Now look at Thursday. Thursday I was selling options. Look at hourly chart also. The market is inside CPR, no? So it is an advantage for you. Definitely you have to see hourly chart. Please don't forget. I've already posted images in Telegram channel. Okay, combining weekly CPR and daily CPR already I have posted in Telegram channel. Please see that. In hourly chart already the market is inside weekly CPR. It is a range bound. And in 5 minutes chart the market is between CPR and S1 previous day low. The market is below 200 SMA. That's why I went for a call option selling. Please remember, I did not sell put option. I did not sell put option because the structure of moving average 2050 are below 200. That's why I did not sell put option. I went for call option selling. Clear, everybody? If you understand, if you understand this one trade which I took on Thursday, it will be very clear for you to trade any day, because trading in a range bound day is very, very difficult. Selling, if the on Friday the market was bullish, selling put option is easy. Just to select the strike price, okay, and you can sell. If the market is bearish, you are going to sell call option just to select the strike price, that's all. But choosing the strike price in a range bound market is difficult. Jeevan Kumar, Jeevan Kumar, please understand, for doing option selling, it is highly recommended to start with 10 lakh rupee capital. Okay, it is highly recommended. Okay, though you are joining this webinar for educational purposes, when you are going to trade, when you are ready to trade, it is recommended to start with 10 lakh capital. It is highly recommended to start with 10 lakh capital. Only then 1% risk in a single day. In a single day, you can risk 10,000 rupee. You can risk 10,000 rupee per day. Okay. So You have to take your risk accordingly. Now let's say I sold call option for 10 rupee. I sold call option for 10 rupee. And in the charts I showed you, I have even shared the chart. Above 20 SMA is my stop loss. So my stop loss was somewhere between 15. 15 rupees is my stop loss. So I am taking only 5 rupee as my risk. I am taking only 5 rupee as my risk. So let's say you are taking a position for 10 lakh capital. 5 rupee is your risk. Okay, so how much capital you can trade? You can easily find out in the sensible. Okay, so let's say you are, let's randomly put, let's say you are selling for 10 rupee. Okay, you are buying a hedge for 2 rupee. Okay, let's randomly put. Okay, and let's say you are buying 10 lots, for example. So you are buying 10 lots, 750 quantities. You are going to put a stop loss of 5 rupee. So what is your risk? What is your risk? 3,750 is your risk, right? Yes or no? I hope I'm correct in mathematics. Correct? So you are going to risk only 3,750 when you are trading. So 3,750 rupees is your risk when you are playing with 10 lots. Correct? And and let's say you are making 5 rupee in this trade. You sold at 10 rupee, 15 rupees your stop loss, and 5 rupees your target. Now you are making 3,750 rupees as a profit. Is your profit. Now again you are going to take a second trade. And again you are going to make somewhere around the 3,000, 4,000 rupee. So at the end of the day, easily you will make 8,000 to 10,000 in a single day. Now you plan your brokerage, now you plan your stop loss, now you plan your brokerage taxes, everything. And now you look at the percentage return you are doing in a single day. You can easily make 0.5 percentage to 1% in a single day. But our target is 0.5 percentage, 1% in a single week. In a single week. But easily you are making, if you are taking two good trades, you are easily making 8,000, 10,000 in a single day. Now think about the brokerage. Understood, Jeevan Kumar? You should not calculate the brokerage taxes for one lot. I am making 600 rupees, brokerage itself 200 rupees. See, drawdown should not be more than 3-4 percentage. You should not lose more than 30-40,000 in a month. My drawdown is 3.5 percentage only. My drawdown is 3.5 percentage only. So your drawdown should not be more than 3 to 4 percentage. Clear? See, we are doing directional option selling. Easily you will make money. Easily you will make money. There are days in Nifty expiry and Sensex expiry. I have made 2 percentage in a single day. It's easily you will make because we are doing directional option selling. Clear, everybody? If you are clear with this one single trade which I took on Thursday, the strike price selection, the stop loss, it is easy for you to if it is easy for you to understand any day. See, Sensex trade, I unfortunately did not save the chart. I thought I saved the chart, but I did not save. See this. This is Sensex expiry. Even if you are selling, let's say you are selling put option below CPR, below 200 SMA, or even if you are selling call option above previous day high, both the ways you will make money. But do any one thing, please don't do both. If you ask me, sir, the market is inside CPR. Okay, so can I sell both call option and put option? Shall I take a straddle like this? Can I take a straddle? Can I take a iron butterfly like this? Can I keep hedge on both the sides? I will tell no. No straddles, no strangles. Okay, please do directional. Okay, you even if you are selling up, the market is inside CPR, so it is a dead range bound market. It is a dead range bound market. It is going to be a sideways. Once the market is inside CPR, that's all. There is no movement at all. If you are selling call option, okay, you can sell, no problem. You are going to sell put option, okay, no problem. But do any one thing only. Don't do both. Because sometimes your stop loss will be hit. The market will go up, your call option will hit the stop loss. The market will come down, your put option will hit the stop loss. So it will be frustrating. Okay, even for me, doing Sensex option selling is difficult. Okay, I have struggled in Sensex option selling, and more this 3.5 percentage drawdown for me is mainly because of Sensex only. It is only because of Sensex. If I stop trading in Sensex now, then my drawdown will be less than 2% only. Opstra subscription is definitely required. And again, please remember, wait till 12 o'clock and wait till 11 o'clock and then take a trade. Before 11 o'clock, don't take any selling trade. I will not recommend. After 10:30, after 10:30, 11 is good. In Sensex, strictly you have to follow the timing because Sensex is very, very wild. And another important point on Sensex, on expiry day, you will see huge premiums. So you should not be lured by the premium. You should not think, oh my God, the premium is nice. Let me sell and let me make a huge money. You should not think like that. Clear? Okay, Sensex simulation is not here. Sensex simulation is not there. Otherwise, I would have shown the Sensex. Clear, everyone? Everyone clear with option selling and strike price selection? Always see, only on expiry day you are going to select the nearest strike price, and that strike price also you are going to select based on the, see, for option selling there is no target, specific target and all. You have to exit based on the percentage of your capital. Okay, let's say you are selling options for 20 rupee or 30 rupee or 10 rupee. If that particular trade has given you 0.5 percentage on your capital, and always plan your lot size based on the risk you have. So you have to risk only 1 percentage on your in your capital. So reduce your lot size accordingly. Plan your stop loss. Now let's say you are selling 30 rupees. Let's say you are selling 30 rupee premium. Okay, on a non-expiry day. Maybe it is Monday or Tuesday or Wednesday in Nifty. In a Nifty, Monday, Tuesday or Wednesday, you are selling 30 rupee premium. So your stop loss should be 15 to 20 rupees should be your stop loss. Even if you look at the options chart, you will understand that. Okay. Maybe let me select a premium which is around 50 rupee or 30 rupee. So here, for example, I have selected a 30 rupee premium. Okay. For example, I have selected. So see here, below 20 SMA, you are selling at 30-35 rupee premium. Okay. So above 20 SMA, above 50 SMA, okay, somewhere 40 points stop loss should be fine. 10 points stop loss should be fine. Sorry, 5 points stop loss should be fine. You are selling at 35 rupee, 35 rupee. You are keeping your stop loss at 40, 40 to 45. So you have to plan your stop loss 10 to 15 points. Now calculate your quantity size. You have to lose only 10,000 rupee. So 10,000 rupee is your risk. Okay. And your stop loss is, let's say 15 points is your stop loss. I'm considering it for example. Okay. So your 15 points is your stop loss. So how much quantities you can trade? So if you are taking, uh, so 7-8 lots should be fine. Or five lots should be fine. Correct? 5 lots should be fine. 5 lots for 375 quantities. So 15 points stop loss should be 3,750. Another 1,500. 4,700. Somewhere around 5,000, 6,000 rupee risk. 5 lots should be fine. Yes, we will go for a lunch break now. No. See, 1% risk per day is our target, 2% profit. No, it's not like that. Risk reward is totally different. Okay, risk reward is totally different. Risk per day, risk per week, risk per month is totally different. See, 1% we are risking in a single day, but in a month, you should not lose more than 3-4%. Rajkumar, you have to think like that. In a month, overall, in a month, you should not lose more than 3-4%. So that doesn't mean you should make 8% in a month. Clear, everybody? We will go for a lunch break. Yes, if you are losing for 4 days, 4% will be gone. That's why you should be very careful in option selling. And see, actually, discretionary option selling is difficult, but once you do discretionary option selling, it will be very, very, very interesting. See, discretionary option selling is like playing a test cricket. It will be very, very, very interesting. Okay. Okay. So guys, can you please post it in the chat box? Did you understand this option selling concept? Are you able to grasp the logic, whichever I said? Guys, please answer the poll. See, in the long run, you should do both. You should be a buyer, you should be a seller, you should do both. Because on Friday, no other way you have to be an option buyer. Everyone, please submit your polls because I don't know what is going in your mind. So only if you people respond, I can come to a conclusion. Okay, I have thought clearly. See, please remember, we are not going to do any adjustments. We are not going to do some diagonal spreads, ratio spreads. We are not going to do some fancy things. It's not needed actually. Okay. Even bigger, even prop desk, which is having more than 100 crores, they are selling only time-based straddles and they are having a basket of strategies. See, prop desk is trading with 100 plus crores. They don't have time to manage your position. Okay, they will not take some diagonals. They will not take some ratio spreads. Okay, please understand. Prop desk is most of the prop desk is preferring only directional option selling. See, Venu, I prefer both option buying and selling because I will tell you, I will tell you. See, till 2021, I was a complete option buyer only. So I captured the COVID fall, and after the COVID fall, the recovery I captured easily only by option buying. But from 2021 till 2021, I was an option buyer, pure option buyer, because I don't like option selling. I don't like option selling because everybody was talking about theta, gamma, vega. Okay, gamma spike is there. Everybody is talking about wicks. Everybody was talking about this put call ratio. So I never looked at option selling. And everybody was talking about adjustments. Okay, standard deviation, one standard deviation, two standard deviation. You have to adjust the position accordingly. So till 2021, I was an option buyer. I don't like option selling because I don't understand these concepts. But after 2021, I started to face struggle as an option buyer. Being consistently profitable was very, very difficult for me because 2020 COVID crash was directional. After that, the recovery was directional. But after 2021, if you see the charts, it was difficult to make money, and the premiums were also totally different. VIX has fallen, VIX was shooting up, and then VIX crashed. So option sellers made good money because India VIX crashed. And as an option buyer, I was facing difficulty. Then only after 2021 only, the 2022 is the year I aggressively followed option selling and I designed option selling according to my strategy. I stopped following other people. You got it right. I stopped following everybody because everybody was talking about Greeks. Even if you go to YouTube channel and if you search option selling, everybody is talking about straddle, everybody is talking about IV, everybody is talking about Greeks, everybody is talking about adjustments, how to adjust a short straddle, how to adjust a iron condor, how to adjust a iron butterfly, when you should take a diagonal spread, when you should take a calendar spread. Everybody was confusing. So after 2022, I started to decide I am a directional trader. If the market is going up, I will sell put option. That's all. I'm not going to follow anybody's method. I am going to follow my own method. Okay, so from 2022, I was doing directional option selling, but I was doing with a limited quantity. I was doing a trial and testing method. So from 2023 onwards, I started to do option selling regularly. I was even selling options in stocks. I was focusing on quarterly results. I was focusing on these kind of important events so that the IVs will be high in stocks, so that I can sell options in those stocks. I can capture the IV crush. But after that, after 2023, from 2024 onwards, I am full time into option selling. See, you guys understood CPR, right? I made CPR easily understandable, right? Yes or no? Similarly, I will make option selling easily understandable. You just trust me, that's all. I made CPR concepts easily understandable. Similarly, I will make option selling easily doable by anybody. Okay? You just follow my option selling method. You no need to look at anybody. See, don't do stock options. Okay? Because for past 1.5 years, I did not trade in stock options. So don't focus on stock options, please. Focus on index options. Probably you can start with expiry day trading. Expiry day trading. Start with Nifty. Please don't follow Sensex because Sensex is volatile. Sensex is difficult. So I want everybody to focus on Nifty expiry. Other days also you can do Nifty, but select OTM strike prices. Select a premium which is around 30 rupees. Less than 30 rupee premium you can select. So choose Nifty expiry and trade in Nifty on other days which is having 30 rupee premium. See, positional option selling I will tell you after the break. Positional option selling I will sell you. I will tell you, no worries. See, in stocks, in stocks you can trade in the first 2 weeks, okay, but be a directional trader in the first 2 weeks. Don't have the mindset to capture the options decay in stocks in the last 2 weeks. First 2 weeks you have to trade in stocks. Last 2 weeks don't have the mindset that the premiums will decay and so that I can make money in stock options. Don't think like that. Be a directional trader in stocks. Yes, option selling after 11 o'clock is only advisable. Rajkumar, after lunch break, I will tell again. Don't worry. See, all your queries will be answered after lunch. See, after 11 o'clock till 3:30, you can do option selling in index. Till 3:30. See, Madhu Verma, I never look at futures chart. I look at spot charts only. I never look at futures chart. Okay, guys, I think we can go for lunch. We did not take break in the morning because we were focusing on the concepts. So the time ran away. See, sometimes, Darab Shardul is asking a very good question. Sometimes the market is falling, but option premiums are not decaying. Let's say the market is falling down, so you will sell call options. You are selling call option, but the premium is not decaying. It means that the market is going to stop falling, the market is going to reverse, and the market is going to go up. That is the trend which is going to happen. Darab Shardul, I hope you understood. You are selling options, but the premiums are not decaying, means the market is going to reverse. So be ready to escape as soon as possible. See, Chandrasekhar, you have to take notes. That's why I said yesterday itself, you want to take notes. You people only then you will remember. all the points I have shared. Okay, guys, we will go for lunch break. Probably we will take a 1 hour lunch break since it is a Sunday. Okay, so the time is 12:50. We will be back around 2 o'clock. Okay, we will be back at 2 o'clock. We will have a session. We will have another three and a half hours session. So we will revise our concepts quickly. We will have a lot of discussion about option selling, strike price selection, premium selection, stop loss placement. So 3.5 hours should be more than sufficient. And I will have and I'm having a good news for you. I will tell that after lunch break. So uh, let us come back at 2 p.m. and we will discuss more. Okay, so let's take a 1 hour lunch break. Since it's a Sunday, try to spend some time with your family. Try to eat try to have your lunch with them. Try to have lunch with your family members and come back at 2 p.m. We will resume the session at 2 p.m. Please don't close the laptop or system. You can just keep it. You can go back and you can come. Okay. Welcome back, everybody. So hope everyone had a very good lunch break. So we are back. So we will continue our learning. So hope my voice is clear, everyone. All right. So for positional option selling also, you have to you have to follow the process which we have already discussed uh, in the image. So maybe once again, let me open the image which I shared in the Telegram channel. So for positional also, don't forget this image. Keep this image in your mind. Tattoo this image in your brain so that it will help you to plan your trades easily. So if you are taking a trade based on weekly CPR, you have to select the weekly expiry. So probably if let's say on Monday, you are going to take a trade in Nifty based on hourly chart. prefer these locations. These locations are mandatory. So wait for the first 1 hour candle to close and then you have to take a trade. If you are taking a trade based on daily chart and monthly CPR, then you have to trade in monthly expiry. So this setup is mandatory for positional trades. Don't compromise on this setup. For intraday, we will be little flexible, but when it comes to positional trading, you have to be very, very uh, strict with your entries and exits. Now, let's say, for example, if you are planning to take a positional trade in Nifty, especially in daily chart, then you have to for daily chart you will be looking at monthly CPR. Daily chart you will be looking at monthly CPR. So this is monthly CPR, and you have to focus on monthly expiry only, not weekly expiry. Okay, so monthly CPR is for monthly expiry only. So once our entry criteria is satisfied, let's say for example last month. So last month, look at this candle, or even you can look at this bull candle. So you can sell put options in these cases, assuming that the Nifty will not come down. So let's say in this bull candle, you are planning to sell a call option, or let me go back, or even let me go to this particular day. So you can check on April. So in the month of April, the candle is taking support at CPR. So probably we can go for selling put options. So what I will do, I will go to Opstra on April 16. Okay, let me go to Opstra. So let me go to April expiry, monthly expiry. So we are getting an entry on 16. So monthly expiry is on 24th April. So that is the last Thursday. Okay, and I'm getting the entry exactly on that particular day closing. So let me go to 3 o'clock, 3:15. Okay. So let me go to the last 5 minutes. So now let me open the option chain. So you can see over here the spot is at, I'm telling for a position swing trading option selling using daily chart and monthly CPR. So the spot price is around 23,400. Okay, so we have to select the strike price. So let us come to the chart to decide the strike price. So the market is above monthly CPR. So we are very confident that the market will not go below monthly CPR. And also we are very confident that the market will not go below previous month low also. So if previous month low is having a good premium, if this previous month low 22,000, if this 22,000 is having a very good premium, you can sell 22,000 put option. If the premium is very, very less, then probably we can go for any strike price below CPR. We can go for 23,000 put option, selling put option. So between 22,000 to 23,000, you can sell any put option based on the premium. So select a premium which is less than 50 rupees is also fine. So select your premium accordingly. So now let us come back to Opstra and let us open the option chain and let us check the put option. So the spot is here. So let me select a let us select 20. 23,000 is at 70 rupees. So maybe 23,000 or 23,000, 22,800 should be fine. So maybe we can select 23,000. Okay. As a round of strike price, let me select 23,000 put. I am selling it. Okay. And for positional trading, this is very, very important. Strike price, you should not buy a hedge which is 1 rupee or 2 rupee. That is a wrong approach. You have to select a strike price where the risk reward ratio is 1.5. So let's say if your risk is 1 rupee, your reward should be 1.5 rupee. Okay, that is how you have to select. So here my reward is 70, which should be 1.5. So I have to select a strike price which is where I will risk 1 rupee. So probably I can select 23,000, 22,500. Let us check 22,500 and let me check the risk reward ratio. Is roughly 30% of the premium received, but 22,500 should be ideal. That's what I'm checking. 22,500 should be ideal. Twenty-three, 23's 22,700 also should be ideal. Okay, so you can select a strike price between 23,000 to 22,000. So we are selecting 23,000 because the 23,000 premium itself is very less only. Okay, so we are we are selling a premium which is around 70 rupees. So we have selected a round of strike price like 23,000. And you can buy a hedge at 22,700. 22,700 is also a good hedge, or you can buy 22,500 also. Both the hedge is equally good. Okay, so at the end of the expiry, why you are selecting a premium around so always try to select a premium which is half of the selling leg. Okay, so let's say for example you are selling a 70 rupee premium, so try to buy a hedge which is 35. So you are selling at 70 rupee, buy a hedge which is around 35. Okay, so at the end of the expiry you will end up making 35 points. So you can keep in mind like that. Okay, so 50 percentage of that particular selling premium you can buy it as a hedge. Okay, because you are going to carry forward this position, so buying a hedge closer is always advisable, because you are taking this position based on daily chart. You are going to carry forward this position. Okay, and your maximum loss, see here, your maximum loss is 20,000. So you have to be very careful. If there is a if there is an uncertain gap down, what will you do? So always you have to be very cautious when you are taking a overnight position. That's why we are buying a closer hedge. Okay, I'm not going for a cheaper hedge to get margin benefit. I'm buying a closer hedge. So roughly 50% of the selling premium you can buy. And now let us look at the chart. So I hope you are all clear with the entry criteria. We are entering because the market is taking support at CPR. Okay. And if there is a bear candle, though I'm taking a 23,000 put option, I'm selling a put option which is around 23,000. So this particular put I'm selling, but I will exit. My risk is once a bear candle closes below the top CPR, I'm going to take my stop loss. Okay, so roughly, if the prices are coming below, if the prices are reaching 2300 levels, I'm going to exit. So right now the current market price is around 23,400. The spot price is around 23,400. But I am going to exit if the prices are coming below 23,150, 2300 levels. So this is how you have to plan your exit. You are not going to sit for the full maximum loss. So once the market reaches 23,150 levels, you are going to exit. Okay, you are going to exit at this particular level. So this is going to be a stop loss. If a bear candle comes, you are going to exit. And let us go and check what happened at the end of the month. So the very next day, the market has reached the previous month high. Almost your target is reached. So let us check what happened the next day. Exactly at 326. Okay, let me go to 1 day. Okay, so you have received 1,700 rupees as a profit for one lot. For 70,000 margin, you are receiving 1,700, which is almost to 2% of your deployed capital. On your deployed capital, you are easily making 2%. So probably you should exit because your target is reached the very next day. Your target is reached the very next day. So you no need any other adjustments, or you no need to look at any open interest. You no need to look at any options, the Greeks. These things are completely not necessary. Okay, if you are a strong technical person, those things are really not necessary. Clear? So this is how you plan your positional trade. Let me show you some other example where the setup is in our favor. So probably you can select this particular month also. So always try to avoid taking positional trades when the market is having a very wide CPR, because when you are having a very wide CPR, you have to be, you can take a positional option selling trade, but make sure you are selecting the strike price as per the trend. Now here the entry is not proper. If you look at our entry image, so all our bullish entries are considered for narrow CPR only. Okay, for bullish, bearish, we are considering only narrow CPR. Because we did not consider wide CPR at all. But when you are taking an option selling trade, if you are an option buyer, you have to focus on these narrow CPR entries. But there are wide CPRs where we need to plan for option selling. You have to determine the strike price very clearly, otherwise you are going to make a mistake. So this is a wide CPR. This is a wide CPR. Determine where the market is positioned and whether the market is between R1 and CPR, whether the market is between S1 and CPR. Try to identify the location and try to understand the moving average. You no need to be more specific when there is a wide CPR. Don't be more specific, because in wide CPR, most of the time the structures will not be proper. For example, last month, if you see, the CPR is very wide, and the distance between R1 and previous month high is also very high. So in this case, how you will plan a trade if you are doing whether you are a buyer or whether you are a seller, how you will plan your trade? I will take a long entry above R1, okay, and I will go for a long entry at CPR. But here there is no long entry above R1. There is a entry at CPR, but at that time the candle is uh, rejecting at 220. There is no proper bull candle close. So how I will plan a trade like this? So these are the areas where you have to be very careful. So if you are definitely, this particular month is not for option buyers. Maybe if you are an option seller, okay, you should not plan a trade here or here. Maybe you can plan a trade once the 20 has crossed to the 200. Maybe above these, maybe these between these days you can plan for an option selling trade, not before that. You have to wait for the 20 to come above 200, and then only you have to plan a trade. Probably in the mid of May 15, 16, 17, then you can plan a trade. You can go for selling put options. Okay, because now the trend is clear. 20 has crossed 200 SMA and the candles are staying above previous month high. So market is above previous month high. So buyers are not having any opportunity, but we as an option sellers, we are having an edge. We are having an opportunity for option selling. Sellers are having an opportunity. So probably we can sell put option, telling that the market will not go below CPR. So 2300 put option we can sell in the month of May, last month. So let us check what happened last month for positional option selling. Let me go to Opstra. Okay, and let me create a new simulation. So let me go to May month expiry. So let me go to May 15. I hope it's May 15, May 19. May 15 or May 15 also is good. May 15. May 15 is a bull candle. Probably we can go for May 15. So the last is May. Okay. So May 15, let me go to 330. So here you can see the time. So those who are new to Opstra, you can see the time. I'm going to 330. And then only I'm going to look at the option chain. So now the time is around 3:15. So let me open the option chain and let me try to select the strike price. So now you can see the spot is at, so the spot is at 25,000. The spot is at 25,000. So let me choose the strike price as per the CPR. So I'm very confident that the market will not come below previous month high. I'm very confident the market will not come below 200. I'm very confident that the market will not come below 50 SMA also. So I can select any strike price. The first option we will select is 2300. If the premium is very less, then we will select 23,500, the middle CPR. If the premium is very less, then we will go for 23,900 or 24,000. So this is how we will select a strike price. But first, let me try 2300 and then 23,500. So always we have to prefer deep OTM for option selling. Okay, so these are deep OTMs for selling options. So let me go to strike price selection. So I'm going to sell puts. So 2300, let me try. So the premium should be, so 2300 I cannot select because the premium is less than 20 rupees like that. So probably 23,500. 23,500 is also very less than 30 rupees. So 24,000 should be ideal. Okay, so 24,000 let me select. So 24,000 is roughly top CPR. I am telling that the market will not come below top CPR. Okay, so 24,000 should be ideal. Anyways, I'm going to exit. So we are taking a entry here. We are taking an entry here. So I'm going to take a strike price which is telling that the market will not come below 24,000. Okay, so how I can plan my stop loss? Technically I can plan my stop loss below 20 SMA, a bear candle, or below previous month high. But those stop losses seems to be very bigger for me. So what I will do, maybe if below this bull candle, a equal bear candle forms, then I will exit this trade. A equal bear candle or any bear candle which is trying to come closer to this previous month high, then we will try to close. Okay, and based on our 1% risk, we will try to exit that particular trade. So you can, let's sell a 24,000 put option, and let me buy a hedge 25% of that. So probably 20, I am selling at 25, so probably around 25 hedge should be fine, or 29 hedge is also good. So let me buy a 500 point away hedge. Okay, now let us come to this particular area. So this is how my graph looks like. So I am selling 24,000 put option, which is around 55 rupee, and I am buying a hedge which is half of that. Okay, so which is around 29 rupee. So let us check what happened both in the charts and in the Opstra platform. So this is what happened. The market has consolidated, the market has come down. Okay, nearly our stop loss is hit, but here the premiums would have not increased. Let us check. So the candle is on, we have to check on May 20th as well as on May 22nd. What happened to our premium, we have to check. So May 20th, we have taken a position on May 15th. We have to check May 20th and 22nd. So let me quickly go to May 20th. So you can see on May 20th, our risk is totally in control. If you want, you can exit this trade because your stop loss is hit based on the candle's logic. But here you can see you have not lost much. Okay, you have not lost much. So probably if you want, you can wait. So let us check 22nd also. So you can see on 22nd, we are actually in a profit. We are actually in a profit, whereas the candle is on the downside. So this is the beauty of option selling. Though the market is coming down, the premiums will not increase. The premiums will not increase. So technically you have to exit, but still the premium has not increased, so you no need to panic. Okay, so then let us run till the expiry, 23rd. Okay, and let us go to 26th Monday, 27. So probably you can exit because there is no big difference in the profits. So out of, again, you are making 2% on your deployed capital. Okay, so this is how you have to plan your monthly expiry trade. So let us check what happened this month, the current month in Nifty. Let's see. So current month in Nifty, probably we can go for selling put options in this bull candle, right? So this candle has closed above 20 SMA. So this candle has closed above 20 SMA. So probably what we will do, we will have a trust that the market will not go below monthly CPR. And even the market will not go below 200 SMA. So the more deep OTM you select, it is more safe for us. So the first preference will be previous month low. So 23,900. So I will check 23,900 put. If the premium is good, then I will select that. Okay, if not, then what I will do, I will select the S1 200 SMA also, 24,000 put. Okay, if not, anything below 24,500 I can select. So between 23,900 to 24,500 you can select any strike price. Okay, you can select any strike price. So let us go to this current month. Let us create a new simulation. Let me go to a monthly expiry, so which is on 26th June. So our entry date is roughly on 6th of June. So 6th of June is my entry. So let me go to 6th June. So we are going to simulate till today. So I will take a position after 3 o'clock only. So let me go towards 3:15. So right now let me open the option chain. So as I said earlier, we can select a strike price between 23,900 to 24,500, whichever deep I select it is safer for us. So let me go to 23,900. So 24,000. So yes, we can select 24,000, which is around 53 rupees. So that should be good actually. And let me select 50% of the premium. So hardly 30 points, hardly 30 or 500, 500 strikes away also I can buy, or 32 also I can buy, 20. So we can stick with 23,500. So 50% of the premium. Okay. Sorry, I bought it. Let me change it to buy. Okay, so this is the position. So let us see what happened. So probably our target has hit in the next day. The market has hit the target next day. If you see, after taking a position on 6th June, 9, 10, 11, 3 days it was trading at previous month high. Okay. So probably there would have been huge premium decay. So let's try to see what happened, especially on June 13. Let's see what happened, because uh, our stop loss is here. This is probably our stop loss. Okay, I'm taking an entry here. I should not get a bear candle below 20 SMA. But here this is a strong bear candle. Let's see what happened. And here there was a gap down opening. Let's see what happened. So probably we have to check what happened on June 12 and June 13. Okay, let's see. Let's go to June 12 and June 13. So probably on June 13, June 12. So June 12, around 3:15, you are still in profit. But the next day is a gap down opening. So let's see at 9:15 what happened. So probably in the gap down market, you have to run away. You are losing close to 2%. 2% of your deployed capital. So you have to run away from this. You have to book your stop loss and you have to exit. Then you can re-enter. Once the market comes up, you can re-enter. So probably you are taking your trade on 6th of June. Here, due to gap down market, you are exiting at 2% loss. Now here once again the market is coming above 20 SMAs. Again you can plan your trade. Again you can take a trade. That is what very important. Many people, what they do, they will book their stop loss, and then they will be afraid to re-enter. So you have to re-enter. So June 16th, again what I will do, I will re-enter, and again the strike prices will be same, 24, between 24,000 to between 24,500, whichever strike price is comfortable. I can re-enter on 16th June. Okay, so this is a stop loss trade. Let me go for a new simulation. I will select the monthly expiry, and on 16th June, I am getting a re-entry. So I will go till today. So I will take a position after 3:15 only, right? Because this is a daily candle. So let me go to 3:15. Let me open option chain. So between 24 to 24,500 is it's good. So here you can see the 24,000 put is around 35 rupees. So probably let me select 20. Probably I will select 24,200 because it is around 50 rupees. So let me buy 24,200. So I'm telling that the market will not go below 24,200. So let me buy half of it. So 23,800 I will buy. Okay. So now let us see. Again, change it to. Okay. So now let us try to simulate what happened till date. Let's see. So 17th June uh, we are in a break even kind of thing. 17th June. It's not. 18th June again in a small loss. 19th June again it's in a break even. So 20th June only we are moving to profit. Okay, because as you can see in the chart, after taking position in 16th, the 3 days the market is not having a big move. So we are in a break even, some 100, 200 rupee loss. So on Friday, there was aggressive movement and the market came and reached our target. So if you see, we took a position on 16th June. After that, there is no bear candle below 20 SMA. So you no need to panic probably. And on Friday, it's hitting our target. So probably even in coming days, the market will stay up. So what happens? You will easily make somewhere around 2%. So you will come to a break even. So the first trade which we took on June 9th is a stop loss. And the next trade is probably we are recovering the loss. Okay. I hope it's clear. Clear everyone. So probably you can, this is how you have to select a strike price. Try to find out the deep OTM where the prices will not go and the premiums should be sufficient for us. Okay. So the more deep you select, the more safer you are. Okay. But if you see the second trade, we selected 24,200 put option. Okay. So 24,200 put option is somewhere around here. So again, that is also a sufficient one because the market is not coming below CPR. The market is not coming below monthly CPR. So don't select the exact strike price. That is not the right idea. Select a strike price which is at the bottom where the premium decay will be even more faster. Comparing to 24,500, the premium decay at 24,200 will be very, very quick. And the premiums will not increase immediately. Slowly only it will increase. So this is how you have to take a trade. No, you see, if you're an option seller, you can target more than one or two trades in a month. Because option sellers can, so see, if you are trading on monthly expiry with the daily chart, so this is daily chart with monthly CPR, and if you are an option seller, you can till the end of the month you can trade. You are getting an opportunity here, you can sell put option. You are getting opportunity here, sell another put option. So you are getting a lot of options. But if you are an option buyer, then you have very less trades only. Okay, you have to strictly take at 20 SMA and CPR. You have to strictly follow the risk management. You have to strictly plan your stop loss. So you have to buy at the money or in the money strike prices. So these things you have to follow. Clear, everybody? And this is the same logic for stocks also. This is the same logic for any instrument in Indian market. If you are a if you are taking position based on daily chart and monthly CPR. Clear? So conservative swing trade, are you clear using option selling? The key point is you should know how to select a strike price. Everyone clear? Shall we go to hourly chart? Hourly chart and weekly CPR? See, gap down market, every day it will not happen, so no need to panic. Every day the gap up will not happen. The gap up or gap down will happen occasionally. Since you are staying in the trend, we are not against the trend. We are staying with the trend. So mostly it will not bother. And see, even if there is a gap up and gap down, why are you worried when you are following your 1% risk? If you are following 1% risk properly, see, according to your 1% risk only you have to take position. You should not take position blindly for the entire capital. You have to take position as per your 1% risk. So now let us come to hourly chart and weekly CPR. Yes, position sizing is same logic only. Always remember one important thing I wanted to say. We have to wait for our setup and then only we have to take a trade. Since you are looking at the chart, don't take any forceful trade. There are many people, what they will do, forcefully they will take some trade. Don't force yourself to take any trade. That is not the right idea. Forcefully don't take any trade. Make sure the candles are taking supports at CPR. Make sure there is 20 SMA closer. Okay, make sure R1 is getting broken. Make sure 20 SMA is very near. So follow our entry. This image is very, very important. This image is very, very important. This entry criteria image is very, very important. Follow this image blindly. Follow this image strictly. And if some setup is confusing you, please don't take any trade. Now here R1 is getting broken. As per hourly chart and weekly CPR, R1 is getting broken, but 20 SMA is not closer. 20 SMA is not closer. So you have to reduce your position sizing. Here you have to reduce your position sizing and your stop loss is a bear candle below R1 and your stop loss is hit. So here also you can see the candles are above CPR and 20 SMA. A bear candle below 20 SMA, your stop loss is hit. Here also your stop loss is hit. So for positional option selling, there is no specific day for entry. You no need to wait for 3 days after for 3 days of the month. You no need to wait for 1 week of the month. Only for intraday, we have to wait till 11 o'clock. But when it comes to positional trading, you can take a trade as in the first candle also. Subject to that our entry is there. Subject to the our setup should be there. That is the foremost important thing. There are some days we get entry at first candle also. Let me show you. See, these are the beautiful opportunities which you should not miss. If you find a setup like this, it is like a jackpot for you. So if you see here, the first month, the first day of the month itself, you are getting an entry. So if the entry is clear, you can take the trade. No worries. No problem. So let us go to hourly chart with weekly CPR. So as you can see, hourly chart with weekly CPR, we are stuck inside a tight range. We are stuck inside a tight range. So make sure you consider the moving averages to understand the trend. Now, for example, you can see the CPR is overlapping. No, there is no ascending CPR, there is no descending CPR. This is what we call as overlapping CPR. Every week the CPR will be in contact with each other. So whenever we are having a overlapping CPR, the market will be range bound. And based on the candle location, we know that the market is bullish, the market is bearish. So for example, here the candles are below weekly CPR. So we know that the first 4 days it is going to be bearish. And here the candles are above CPR. So we know that the first 4 days it is going to be bullish. And this week also the market is above weekly CPR. So we know that the market is going to be bullish. Along with that, try to look at the moving averages also. So the candles are above 200 SMA. So the trend is going to be bullish. Okay, above 200 SMA. So 20 and 50 is also above 200 SMA. So the trend is going to be bullish. So it's better you stick with bullish trade, and better you sell put options rather than selling call options. Okay, sell put options rather than selling call options on a weekly expiry. Okay, now let us try to decide. So probably in this week, if you see, the market is below weekly CPR, taking resistance at 20 and 50. So there are higher chances they may come towards the 200 SMA. So in this week, let us check this week. If you are checking this week, definitely a stop loss would have been hit. Okay, because it's dead sideways market. Okay, you will be selling call option above 20, above CPR, it is coming down. You will be selling put options below CPR, it is going up. So probably these are the days your stop loss would have been hit. Okay, so first let us check this particular week, June first week. Let us check. We will check June first week, second week, and third week. So June first week, probably wait for the first 1 hour candle to close, and then you decide your trade. Okay, so probably in the first candle, the candle is closing below S1. You can go for a lesser position sizing for taking a short. You are going to sell, in short, you are going to sell call option. So here you can see the market is below weekly CPR. The market is below 2050. The 20 is not closer to the candles like this. So we cannot go for a huge position sizing. I have to go for a lesser position sizing. So here I know very confidently that the market will not come above CPR. Okay, so 20 and 50 are having the energy to act as a resistance. So previously the 20 and 50 were providing energy and they were providing support. The moment 50 SMA is broken, I know that the market is coming down towards 200 SMA to get the energy. Clear? So first understand what is the structure based on moving averages, who is having energy, and where the market is going to go. So right now here you can see the 20 and 50 are not having the energy. So the 20 and 50 is broken easily. Now the 20 and 50 are going to provide resistance, and the market is going to travel towards 200 SMA to get the energy. Clear? So now what I will do, I am very confident that the market will not go above 2050 SMA as well as the weekly CPR. So probably what I will do, I am ready to select a strike price which is above weekly CPR. Okay, so my first preference would be 25,000, which is previous week high. Okay, previous week high 25,000 will be my first preference for selling call option. And if the premium is very less, then I will go for any strike price above 24,800. Even I can go for 24,800, 24,900. That I can go for that those strike prices also. So now let me go to Opstra. So this is June first week expiry, weekly expiry. Let us go to Opstra. I will go to new simulation. I will go to June first week expiry in Nifty. So 5th of June is the first expiry. So let me go to Monday, 2nd of June. So we are going to simulate from Monday to first week of expiry, Thursday. Okay, and the first hourly candle, 75 minutes candle closes at 10:30. So let me go to 10:30. So probably here around 10:25 I can start selling call options. So let me select 25,000 call option. So I am confident that the market will not go above 25,000. So 25,000 call option is around 22 rupees. Uh, uh, so probably I will select 24,800 call option, which is around 35 rupee. Okay, so that yes, so at around 24. Sorry, it is around 120. Sorry. So yes, I will select 25,000 call option because it is around 37, 36, 67 rupee. Okay, by mistake I saw this particular price. Okay, so that is not the price. That is something called as delta. Okay, I don't want to see these delta. How to switch it off? Okay, so this is the strike price. So probably I will sell 25,000 call option. Uh, mm, yes, 25,000 call option. If possible, I can select even a far OTM. So 25,000. Yes, 25,000 should be fine. No need to select more deep OTM. So 25,000 call option I will sell, which is the previous week high. So I will buy a hedge. So I have sold around 67 rupee, roughly around. Let's keep it as 70. So 35 rupees premium we can buy. 35 rupees premium I can buy. So, or yes, 35 rupees premium I can buy. Yes, that should be fine. Okay, so this is the position. So let's check how the market has moved, uh, and let's see whether our stop loss is hit or not. So first of all, in trading view, let's check. On Monday, our stop loss is not hit. Tuesday, so probably we will check on Thursday, 5th of June, the first hourly candle. Okay. So we took a position here in the first hourly candle. Probably we will check on Thursday, 5th of June. What happened? Before that, if you got 2% on your deployed capital, probably you can exit the trade. It is not mandatory to sit in the trade uh, till the end. Okay, probably you can exit also. See, 4th of June in the morning itself, you got more than 2% of the day. So you are not going to sit in this trade till the expiry. So probably on 4th of June in the morning, you are going to exit. Probably let's go 30 minutes slowly. So we are taking a position on Monday, first hourly candle. Let me go 30 minutes. Okay. Now here I wanted to ask a question actually. Uh, I will ask a question. Uh, so as I said earlier, it's advisable to start with a decent capital of 10 lakh rupee if you are into option selling. Okay, and 1% risk on your capital will be 10,000 rupee. So now what I am doing is we are doing some back testing with one lot. So even if you want to if you want to try out, you can start with one lot in option selling. Okay, so one lot the margin required will be less than the less than 80,000 will be the margin requirement. So you can start with one lot. Now here your maximum profit is 2,000 rupee. uh, as per the data, as per the Opstra data, you can see your maximum profit is 2,400 rupee and your maximum loss is 12,000. Of course, you should not worry about the maximum loss, okay, because you are not going to sit till your maximum loss, okay. You are going to exit based on your stop loss only, based on your stop loss in the chart. Clear? Based on the stop loss in your chart, you are going to exit. So, so what you have to understand here is your risk is 10,000 rupee. Okay, so your risk is 10,000 rupee. So don't be worried when you are seeing 1,000 2,000 rupee loss in your account. Okay. So for one lot you are seeing a 2,000 rupee loss or a 3,000 rupee loss. Okay, don't be worried about the losses since the risk is under control. But remember, you have to exit if your stop loss is hit. So you should focus more on the spot chart. Clear? So here at times you are seeing 700 rupee loss or 1,000 rupee, 2,000 rupee loss. Don't be afraid. Okay, because your risk is 1%, which is 10,000 rupee. And again, your stop loss is not hit. Look at 3rd June first hourly candle. Let us look at 3rd June first hourly candle. So this is 3rd June first hourly candle. You can see it's a bear candle. It is actually a bear candle. The market opened here and immediately it came down and it closed here. So it's not a bull candle. So you no need to panic actually. Clear? Technically, our stop loss is getting hit here only. But before that, our target was hit on 3rd and 4th of June. If you see 3rd and 4th of June, we got easily the maximum profit we easily got. Which we are seeing in the Opstra, the maximum profit we easily got. Let me go to the mid of 3rd June. So let's go. So if you see after 130, no, you are easily sitting with 1% profit. And in the next day, oh, the next day morning, see easily you got almost more than half of this profits you got. Clear, right? Clear, right? So that's all. Now you can exit. Almost you got 3% on the deployed capital. So you can probably exit. So we are not going to we are not going to wait till the end. We are not going to wait till the option premiums become zero. So right now, if you see, the premiums would have decayed nicely. See, we sold around 67 rupee, and right now it is at 11 rupee. So you no need to fight for that 10 rupee and all. Clear, right? You no need to fight for that remaining 10 rupees. So you can just exit. That's all. So we are not going to wait till the premiums become zero. Once a certain percentage is made, you can easily book your profit and come out. See, Chandrasekhar, both you can do. Should we start with monthly expiry or weekly expiry? The both you can do. See, profit we are calculating 2% on deployed capital. Loss we are calculating based on the overall capital. See, always we keep our profit expectations as low as possible. Okay, profit expectations should be as low as possible, and loss expectations should be realistic as possible. So the loss expectation, the realistic loss expectation is 1% on your overall capital. So that should be realistic. Okay, but for profit, you cannot expect 1%, 2% like that, because when it comes to option selling, making realistic, uh, more than making realistic profits, you have to make some realistic profits is possible when you are doing everyday option selling. When you are doing, and when you are doing expiry trading, the realistic profit is possible. But when you are doing some positional option trade where the overnight risk is high, reducing your realistic expectations and is the better idea. I hope you understood, Rajkumar. So when it comes to losses, you should have a realistic view, like 1% risk. But when it comes to profits, you should compromise. Prashant Reddy, probably I think you are. Yes, you need to exit the hedge at the same time. See, in Fire's simulation, it will not show probably. Let's see. Uh, June first week, Monday. Monday, the first candle I am taking, the first hourly candle. Let me try in Fires. So Monday at 10:30 probably. Yes. So Monday at 10:30, you can see people have sold more call options at 24,800, 24,800 and 25,000. And again, we are also taking the similar strike price. So we also sold 25,000 call and we bought a hedge at 25,200. Understood? Okay, how to execute the order in Fires? It's very simple and easy. You just go to option chain. Just go to option chain and let me sell 25,000 call option here. Okay, and then minimize it, and then go to 25,200 option, 25,200 option. Just click on buy. Okay, now open this. You can see 25,000 call options sold here. It's like a basket. 25,000 sold here. and 25,000 buying here. So that's it. Now click on analyze. You can analyze the payoff graph. You can see what is your maximum profit. You can see what is your maximum loss. Okay, so here you can see. Clear? So now if you click on execute orders, your order will be executed. So this is how you enter in fires. Always, always enter at market order, because index is having some good liquidity. So especially this is Nifty, so you no need to worry about limit order. Just punch your order at market order. Okay, just punch it at market order. So probably first week of June, the market has rewarded us. So let us go to Monday once again. So Thursday is your expiry. After that, Friday is an option buying day. So probably our trade will be over in 4 days. So Monday you will take a trade only if the entry is there. Take an entry on Monday. If there is no entry, then please take an entry on Tuesday. Okay, and you should not look at 5 minutes chart. You should look at hourly chart only. Those who are trading using hourly chart and weekly CPR, you have to look at hourly chart only predominantly. So probably this is the second week of June. You can see there is no proper entry. Okay, so you have to wait for the proper entry. So probably we can enter here, correct? Second week of June. Second week of June, you can see the market is in between weekly R1 and previous week high. There is no entry. And the next day also, the market is in between R1 and previous week high. There is no entry. But here on 11th June, the market is breaking R1. So can we take an entry there? I can go for a long, right? See, why you should not buy a deeper hedge? Because your overnight risk will be high. Your overnight risk will be high. If you buy a cheaper hedge, your risk is very high compared to your reward. Say, for example, see, this is a good question. Let me explain it. Satyabrata is asking why we are buying a nearby hedge. For example, here I am selling 25,000 call option. So I have sold it, but I am buying a call option which is very near 25,200. So he is asking why you are buying 25,200 call option, why you are buying very near. You have let us buy a very cheaper hedge, he is telling. Now if you see here, my maximum profit is 2,600. Okay, and my maximum loss is 12,000. But if I am buying if I am buying a very deeper hedge, what happens? My profit will increase little, but my max will increase very, very higher. Let me show you. Now, let's say I'm buying 25,500 call option. Okay. See, if once I am buying a cheaper hedge, 25,500, what happened? From 2,600, my profit increased to 4,400. But look at my loss. From 12,000, it has increased to 33,000. Got it? From 12,000, my loss has increased to 33,000. So almost 20,000, my loss is increased. But my profit increased only 2,000. Okay. And moreover, this is a carry forward position. You are carrying after 3:30. You are taking a overnight position. If the market is gap down, then there are chances you will lose a huge money. See, blue lines indicate how much profit you are making at that particular time. At that particular time. So again, it is a very basic one. A blue color shows if the market goes against you, you can see today's profit. See, I'm keeping the cursor. You can see today's profit and expiry day profit. If the market goes here, then on that particular date, the date which I have kept here, okay, on June 2nd at 10:30, okay, if the market goes here, you will make 7,500 rupees loss. But if the market stays there till June 5, till the expiry, weekly expiry, then you will make 4,000 rupees profit. Okay, so that again, there is a basic one. You can go and refer the basic YouTube videos. So are you clear with the entries on the second week? First day, second week on 9th June, I cannot enter. On 10th June, I cannot enter. On 11th June, I can enter, correct? Shall we sell put options? Shall I sell a put option? Because market is above R1. Everybody is awake. I hope nobody is sleeping. So let me go to Obstra. So how can I select a strike price? So the more deep I select, it is good for me. So I am very confident that the market will not come below weekly CPR. Market will not come below weekly CPR. I am very confident. So let me see how that this OA statistics helps is now let me go to 11th June on 11:25. Okay, so what I will do, I will go to 11th June. Let me go to OA statistics. Okay, and let me go to 11th June. So I'm going to 11th June, and the time is 11:45. Candle closes at 12:30. So let me go to 12:30. What is the OA statistics? Okay. So you can see here, more put options are sold. This is how you interpret the OA statistics. You can see here, more put options are sold at 25,100. 2,500 put option, more people have sold, and 25,000 put also more people have sold. So we are also having a bullish bias. So we can select any two of the strike price, and we should match with our technical level also. So here you can see, I am very confident that the market will not go below 24,700 based on weekly CPR. If 24,700 is very cheap, then I have to go for 24,800. If 24,800 premium is very cheap, then I have to go for 24,900. So this is how we have to select the strike prices. But most probably we have to select the deeper strike price only. So what I will do right now, I will go to the Obstra. Let me go to second week of Nifty. So let me go to new simulation. Let me go to second week of June. So which is 11th June expiry. So we are getting entry on 11th June only, right? So on 11th June at 12:30, we are getting an entry. So let me go to 12, closer to 12:30. So probably around this particular area, what I will do, I will sell put option. So I'm willing to select a 24,700 put, 24,700 or 24,800 put, depending upon the premium. So 24,700 put. So 24,700 put, it is available at 21 rupees. and 24, sorry, not 4 rupee. It is available at 4 rupee, sorry. Okay, so this is the LTP. So 24,800 is at 6 rupee. So probably these are at single digits, so I cannot select these strike prices because we are taking position on Wednesday also. So probably I can select 25,000. Even I cannot select 24,900 because it is at 11 rupee. Probably I can select 25,000 put. Okay. And let me select a hedge which is, uh, so let me sell first of all, let me sell this 25,000 and let me buy a hedge which is closer to this. I'm carry forwarding this position. So probably I can select 24,700, 300 strikes away. Okay. So 300 strikes away, I'm carry forwarding this position. But probably you will make money in the intraday itself. There is no need, there will not be no need of carry forward, because if you are taking a position on Monday and Tuesday, you can carry forward. But when you are taking the position in Nifty on Wednesday and Thursday, both the days, daily, both the days intraday itself, you will get a good decay. So you no need to carry forward on Wednesday. There will not be any need maximum. So my stop loss is any bear candle closing below R1 is my stop loss. Okay. So the very next hourly candle, our stop loss is hit. Now, please remember, we are not going to wait till the hourly candle close. Sometimes if there is a very big bear candle, you have to exit before the hourly candle closes. Now let me show you. Let me move 5 minutes. Let me move. Okay. Or let me move 15 minutes. If the loss gets bigger because of the size of the candle, you no need to wait for the full hourly candle close. So probably that hourly candle opens at 1:30 and closes at 2:15. So probably at 2:15 you have to exit because of the stop loss hit. So so almost the time is 2:15. So probably you can exit at this minimal loss. You can see the premiums also did not increase much. So probably you are entering at 30, 20 point, you are selling at 20 and you are keeping a stop loss of 30, 35. Again, it is good to exit at this price. So this will be a loss, a minimal loss. A minimal loss on second week of Nifty expiry. Clear? Almost you are losing 800 rupee. Clear? On Thursday, you no need to. So on Thursday, you cannot take a position based on hourly candle because of expiry. So probably you have to check 5 minutes chart for taking a entry on Thursday. So again on Wednesday also the premium is not there. So probably on Wednesday and Thursday you have to look at 5 minutes chart for your entry. See, right now Thursday is the expiry, so probably we can take a entry on Monday or Tuesday, and we can close the trade at Thursday. So now when the expiry shifts to Tuesday, now we can see the NSE is going to shift the expiry from Thursday to Tuesday. So in that case, what we have to do, this Monday to Friday CPR will be the same, because Monday to Friday, 5 days we cannot change. Okay, this expiry thing is totally different. But 1 week trend, we have to see. Weekly trend means Monday to Friday only. Expiry is a different thing. Expiry is only for contract, not for the market. Market is there from Monday to Friday. Expiry is only for the contract. So we should not change the CPR from Tuesday to Monday like that. CPR is constant. Monday to Friday, CPR is only we will use. Only the contract is expiring on Tuesday. So what we will do, we will take an entry on Wednesday or Thursday. So based on Wednesday, Thursday, we will take an entry and we will close on Tuesday. That's all. Understood? Understood, everybody? See, Monday to Friday, 5 days the market is there. Correct? You cannot change Monday to Friday. Monday to Friday is constant. So, seeing the CPR based on Monday to Friday, weekly CPR, that is also will not change. It is a constant. This Tuesday expiry, Thursday expiry is for the contract only. Okay. Tuesday contract expiry overs. The next Tuesday another expiry overs. The next Tuesday another contract expires. So Tuesday, Thursday is only for contract. Okay. So we should not change the Monday to Friday market calculation. Monday to Friday market calculation is constant. You should not change that. CPR you should not change. See, I am selling options for intraday only, not for positional. No, Vinita, actually, I was answering Raj Kumar's question. I hope you people understood how you are taking option selling position for positional trading. So based on daily chart and monthly CPR, we saw how you should take a trade. And based on hourly chart and weekly CPR, we saw how you have to take a trade. And for intraday trading also, I showed you how you have to take a trade. I hope you, by this time, I hope you are all clear. So option selling is clear. Strike price selection is clear. Especially in 5 minute chart, is it clear? Everyone? See, for intraday, the hedge can be in single digit. See, I will tell you, for intraday trading, who will do intraday trading? Only full-time traders will do intraday trading. Okay, and swing trading, who will do swing trading? People who are not able to watch the market full-time. So people who are in job, they will do swing trading. Correct? So people who are doing swing trading, you have to buy a close hedge. You have to buy a nearby hedge. Nearby. So people who are doing intraday, we are seeing the screen full time. Every candle we are seeing, every minute we are seeing. So for intraday, we can buy a hedge which is in single digit. So you can buy 1 rupee premium. You can buy 2 rupee premium just for namesake. You can buy 5 rupee premium just to get margin benefit. But for the selling strike price, we will have the stop loss. That is mandatory. For selling leg, we will have the stop loss. Understood, right? So that's the reason for intraday we are buying 1 or 2 rupee just to get the margin benefit. But for swing trading, we are buying the nearby hedge to reduce the maximum loss. Okay, and strike price selection is based on the CPR and based on the. So now what I will do, I will close the CPR and SMA. I will take a random date. Okay, let me go to February 14, Lovers Day. Okay, Fridays for option buyers. So let me go to February 13. Random date. Okay, now let me switch on the CPR. So let me try to understand what I will do on 13th February, Thursday. So first try to understand market is taking support at CPR. So I can sell put options. That is the first point. And here also the market is breaking R1 and previous day high. So I can sell put options. Correct? Now I'm going to sell put option. I'm very clear. I want the 20 to provide support, correct? I want the 20 to provide support like this. And I want the 50 also to be like this. Correct? So this will become a high probable trade for me. Yes or no? This will become a high probable trade for me. Now both the setups I have given in the image. Let me compare it with the image. So this is the first entry you are seeing, and this is the second entry you are seeing in the chart, correct? So above CPR. So this is the first entry and this is the second entry. And again, a third entry. So this is the entries which you are seeing in the image. Now there is another setup which you are seeing, which is the CPR attract candle. See here. The CPR attract candle. The market is reversing from R1 and previous day high. This setup is coming here. This setup is coming here. So this is called a CPR attract candle. This is like a fourth setup. And our target is CPR. Whenever CPR is attracting the candle, I have said this in YouTube channel also. So whenever the CPR is attracting the candle, okay, our target is always CPR. So this is the entry and this is the target. Okay. Now let me come to the chart. So already I have said how I want the moving averages. So I said I want the 20 like this. Okay. And I want the 50 like this. Okay. So what you have to understand is the entry at CPR. So the entry at CPR and the entry above R1, you can expect the 20 to act as a support. But here in this entry, what happens? There are higher chances 20 will turn and 50 also will turn. See, I have not yet turned on the moving average. I don't know how the moving average will be. But I am telling how I need the moving average. I'm telling you how I want the moving average. So I may be wrong also. Now let me turn on the moving average. Okay. See, can you see? Can you see what is the structure of moving average? Understood? That's all, very simple. So this is my expectation and this is what the market is having. So exactly what I said. And and I did not see the moving averages. Correct? So this is how your expectations should be. So now it is easy for you to, now it is easy for you. So here I will sell put option. So here I will sell put option. And here what I will do? Here what we will do? Please tell me. Here or here what we will do? Here we will sell call option. So we have to be very quick in live market as an intraday trader. How to identify CPR attract? Whenever you see a bear candle at R1 and previous day high, closing below R1 and previous day high, that is called as CPR attract. So this is, see, this is R1 and this black color line is previous day high. If you see a bear candle like this, then it is called as CPR attracting the candle. Yes, correct. Rejection. Okay, so now what we will do, we will try to backtest what happened on this particular day on 13th February. I will show you in Obstra. So how to select the strike price? So now again coming back to the strike price selection. So here I am getting an entry. So what I will do, I can confidently sell that the market will not go below CPR. So roughly around 22,900, 22,900, 23,000, 22,900 or 23,000. I can sell 22,900 or 23,000. Okay, so let us go and check the Obstra. So let me go to February second week, February 13. So I think let me go to new simulation. February 13. Let me go to February 13. So let me look at the entry time. The entry time is around 9:25. 9:25 or 9:30. Both are correct only. 9:25 or 9:30. So let me go to 9:30. So as I said earlier, 23,000 put option I can sell or 22,900. So here you can see 22,900 put option itself is at 30 rupees. So easily you can sell that. Okay, the premium is good, so you can sell that. And I can buy a hedge in a single digit. So probably 22,900, I can buy at 22,700, 22,500, 22,500 also I can buy hedges for namesake. Okay. So now let us simulate. So I have taken a position at 9:30. Okay, so 9:30 I have taken a position. So around 10 o'clock, around 10:30, let's see, because R1 is getting broken. So we can shift a selling leg. So let me check at 10:30 to 11:30 how the premium decay has happened. Okay, so let's go 15 minutes. So here easily you got 2%. So what you can do is you can easily book your profit and you can exit. We sold at 30 and now the current price is at 10. Don't wait for 0. Immediately exit, book your profit and move. Let's move on to the next leg. Okay, so around 10:30, let's see. So 10:30, 11:30 and all, we can go for the next strike price. So the time is 11:30. Let us book this profit and we can go to the next trade. Okay, so what is the strike? What is the price? The price is around 3. So let me exit at 3. Okay, and let me exit this at 0.5. So we have exited and we have booked the profit. Now let me take the next trade. So the next trade is at 11:30. The market is taking support at R1 previous day high. No. So let me sell us now. Now how I can select a strike price? So earlier we selected a strike price below, based on the CPR. Now the market has moved. So now I can select a strike price based on 50 SMA. So exactly at this point, I can see like exactly at this point the market will not go below 50 SMA. So probably 2300 should be fine. 2300 or 23,150 because I'm expecting the market will not come below previous day high. So 2300 or 23,150 should be a ideal strike price based on the premium pricing also. So now let me go to option chain once again at 11:30. So 23 so 2300 or 23,150. So maybe I will go with 23,150. Yes, 23,150, which is around 18 rupees. Let me sell that and let me buy a hedge which is having 1 rupee. So 22,800 I will buy. Okay, for a hedge. Okay, so now what I will do, we will go and back test. We will see where is our stop loss. So exactly at 11:30 I have taken my trade. Okay, exactly at 11:30 we have taken the trade. So exactly at 11:30 we have taken a trade. So what is my stop loss? My stop loss is closing below 20 SMA and below R1. So these areas you have to book your stop loss. So let us look at the time. The time is around 12:20, 12:30. So between 12:20, 12:30, I have to exit my trade manually, even if your stop loss is not hit. Okay. So let me go to 12:30. Wait, it's not coming. So I'm going very slowly. Let me go to 12:30. If you see at 12:30, though we are exiting, you can see here the premiums did not increase. So see, look at this 23,150 put option. This 23,150 we sold at 18 rupees, but it has decayed 13 rupees. But still you have to exit. You should not think, okay, the premium decay has happened, why I should exit. Don't think like that. You have to exit. So let me exit this trade. So I'm exiting at 14 rupees. I'm exiting this at 1.1. Okay, so we have exited this trade. Now again come back to the chart because our stop loss is at around 12:30. Okay, our stop loss is at around 12:30. So we have exited this trade at 12:30. Now, wait in these areas, unnecessarily don't take any position. Where you have to take a position is when the market is coming below previous day high. Because that is where the CPR attract candle gets activated, or even you can wait for the 200 SMA to be broken and you can enter at below 200 SMA also. Okay, so in this both the candle anywhere you can enter 130 or 135. So now we are going to sell call option. Okay, the first option will be the market will not go above today high. So let me remove this pink color line. So let me show you. So first option for selecting a strike price is the market will not go above previous today high. Today's high is here. So around 23,200. The second option will be R1. So 23 again 23,200 or 23,150 or above previous day high also. So these are the options where we can choose the strike price based on the premium also. So anywhere between 23 150 should be fine. 2300 above 200 the market will not go, will be very risky. So 150 should be fine. So 23 150 call option we can sell. So let us check. Okay, so the market is coming below 200 SMA at 130 135. So let me go to 130 135. Okay, so let us go to 130. Yes. So now I'm going to sell call option. So this particular call option we can sell 23 200 is available at 10 rupee. Okay, 10 rupee it is available. 23 150 is available at 27 rupee. It is good. It is a good premium. 23 150 is very closer. So 23 200 we will select. It is available at 10 rupee. So I will select 23 200 call. I will sell at 10 rupee, and I will buy a call which is having 1 rupee. So I am going to buy 23 23 350 or 23 400 we can buy. Somewhere it will be around 1 rupee. You can assume it is at 1 rupee. Okay, I am going to buy. So now we will see how the premium has moved. So it was around 10 rupee. We have sold around 10 rupee. So let us go 5 minutes. Slowly we will go. Okay, by the time it reaches 2 o'clock or 2:30, no, completely this 10 rupee has become 5 rupee in another 10 minutes. Okay, a complete premium decay. After that, it will not at all increase. It will not at all increase. So by the time around 2 o'clock, 2:30, it reaches no around 2:15, 2:30. What you can do, you can sell 150 call option. See, around 220 you can see here the premium has drastically decayed, and it has gone to 1 rupee, and CPR it touched the CPR. So probably what we can do, we can exit this trade around 1.65 or 2 rupee we will exit, and this one we will exit at 0.3. Okay, so once we have sold around 10 rupee, once it becomes 5 rupee or 5 rupees, no, you can shift your strike and you can sell 130 strike prices. 23 150. 23 150 is still available at 25 yes, 23 25 it is still available at 3 rupee. 2300 we can sell, which is at 8 rupee. So like that you can move the strike prices, and already the prices has reached the CPR. So 2300 you can sell, because the chances of the market to go above 200 SMA is now very less. Chances of the market to go above 200 SMA is very less. So which is around 2300. So again, you can sell 2300. So you can buy a hedge, sell at 8 rupee, buy a hedge for 1 rupee something. Again, you can move and check for 5-10 minutes. So see here, you sold for 8 rupee, it became 4 rupee. That's all. So this is how option selling works. People fight for few rupees with huge quantities. That's all. So, but the idea is making how much percentage and how much percentage you are losing. That is the idea. So finally, you make 3,000 rupee profit for one lot. Maybe if you are taking 5 lots, or maybe if you are taking 5 lots, you will be making 15,000. That's where it makes the difference. For one lot, you are making 3,000. Let's say you are taking 5 lots or 10 lots. That's for 10 lots, you hardly need 10 lakh capital. So out of 10 lakh capital, you can easily make 30,000, which is more than 1%. So at least you can make 1-2% profit. Understood? Understood. We took a random day and we back tested. So strike price selection is, I hope strike price selection is clear. For one lot, you need assume you need 1 lakh for one lot. Just assume you need 1 lakh for one lot. Okay. Everybody clear? Clear? Everybody is clear? Is option selling easy? I did not say anything about open interest. We are just seeing OA statistics where more people have sold. We did not discuss about option Greeks. We did not discuss about adjustments. Just to look at the technicals, we are selling options and we are exiting manually. We are not going to sit till maximum profit. We are exiting manually. Expiry day, you need additional cash margin. Yes. Yes, you need. But again, when you are buying a hedge, it will not exceed more than 1 lakh. Clear, everybody? Everybody is clear with option selling? Everybody clear? See, long-term contracts, taking position for 6 months, 1 year, many people do that. So, what I feel is it is for big clients, it is for HNI people because they have portfolio. They need to hedge their portfolio. They will be having a portfolio of few hundred crores. So they would have bought a lot of companies. HNI people will be having a portfolio of 50 crore, 100 crore. Just imagine Rakesh Junjunwala. Rakesh Junjunwala is having a portfolio for a few thousand crores. So these people, they will play in long-term contracts, 6 months contract. They will take covered call. They will take covered put to hedge their position, to hedge their portfolio. So that is for HNI people. That is totally different. Dinesh, same procedure for stocks. Same procedure. But in stocks the problem is you need to select only large cap stocks. You have to select only the liquid stock. Okay, I have shared you the list. Follow the 20 stocks. That is enough. See, in a month you can easily make a 2%, 3%. Okay, in a month easily you can make. See, generally my expectation is 1% for 1 week. So 4 week, my expectation is 4%. Okay. Now let's say deducting brokerage, deducting taxes, deducting some losses. If you are sitting in 2% profit, that is enough. Full-time trader, travel anywhere, sit anywhere, internet connection, laptop, 2% per month, sit peacefully, spend time with your family, enough. Okay. This financial year, April I made 4%. Okay, May I made 3.5 percentage. June month I am sitting with 1 percentage. Okay, almost June is going to over. 1 percentage I am sitting in 1%, but monthly expiry is coming. So I will trade in Sensex, I will trade in Nifty, I will trade in Bank Nifty. So easily I can touch 3 percentage. So this month I am sitting in 1 percentage. Okay, last financial year I made somewhere around 38%, 39%. The last financial year, the interesting part is I was absent in the last quarter I was absent. I did not trade much in the last quarter. Okay, so the first 3 quarters, first 9 months I was actively trading. The last 3 months I was absent. In the last 3 months, out of 60 trading days, hardly I would have traded only 10 trading days. So I was absent in the last quarter. So I was finishing the financial year with 38% return. So that's how that's how you make. See, the stocks which I am posting, no, those are some good quality stocks having some good setups. Maybe it can give a good rally. Maybe it can give a good fall, or maybe it can give some reversal trades. That's why I'm posting. See, I'm using as of now I'm using fires for my trading purposes. Okay, Zerodha is also there with a small capital, with a very small capital. So primarily I use fires. Fires is my main account. Okay, and Zerodha I'm having some little amount. See, 100% you can use this strategy in any market, US market, forex, commodity. I know a lot of people using our strategy in forex market and forex market and commodity market. I have we are having students from America also. They are trading in US market. So right now we will spend 15 minutes for activity. I want you all to look at some charts, look at some uh, patterns. See, most of the points, Chandrasekhar, most of the points I have covered. See, with respect to trading, with respect to option buying, with respect to option selling, most of the points I have covered. Okay. If any points which I wanted to tell, I will post it in the Telegram channel. So no worry. I am not trading in futures, so I don't have any idea. So I don't have any idea with futures trading. See, those who are not in Telegram channel, please WhatsApp me your email ID and tell me that you are not in Telegram channel. I will add you manually. Yeah, Vinita, Bank Nifty is also same logic. The strike price selection, selecting deep OTM, uh, the logic will be the same. See, in commodity, please understand, in commodity, when you are trading in commodity, you have to be very, very careful with crude oil because crude oil is more volatile commodity across the globe. Across the globe, crude oil is very, 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 very essential. Crude oil is essential for the entire world. Crude oil is essential. It is very, very sensitive. It is very, very volatile. So when you are trading in crude oil, you have to be very, very aggressively. You have to be aggressively careful. You have to be very, very strict. You have to be very, very disciplined. You should focus on very high probable trade. Okay, so don't trade in crude oil if you are a sensitive person because it's very volatile. So before lunch, I said the I will tell a good news, right? Uh, so I will tell that good news right now, uh, which is not promised, which I did not tell in the tell while I was announcing this webinar. So we will have doubts clearing session, three doubts clearing session, 3 weekends, 3 weekends we will have three doubts clearing session. Okay, there I will clear your doubts. Okay, I will discuss what happened throughout the week. Okay, and I will share my trades also so that you can learn from my trades. So this I did not promise during the webinar. While announcing this webinar, I did not tell about the doubts clearing session. We will have doubts clearing session every weekend for 3 weekends. Okay, evening 6 to 7 or 7 to 8. Based on my availability, 1 hour we will have a doubts clearing session. There I will come in again. I will create a session here. So you can join, you can ask your queries. I will share my trades. That entire Monday to Friday, whatever trades I took, I will share. And you can also ask your queries. So 3 weekends we will have doubts clearing session. So on next week, Saturday or Sunday, 28 or 29, we will have one session. And the very next week, 5th or 6th, Saturday or Sunday, we will have the second session. And the very next week, 12 or 13, okay, 12 or Saturday or Sunday, we will have one session. So three doubts clearing session we will have. So that is the good news. Aggressive swing trade based on weekly CPR only. Yes, recording will be provided for this session and for doubts clearing session. See, Madhavan, I have already answered that question. I do both option buying and selling. I do both. See, I'm sitting in live market. I will be selling options. Initially, I will be taking a less position sizing. I will be selling options. If the premium is not decaying or if the premium is not moving as I expected, whereas the market is trending and the market is going good, I will become an option buyer. I will start buying options. So I will be dynamic in the live market. Okay, so I am both option buyer and seller. Mostly I am an option seller because Tuesday Sensex expiry, Thursday Nifty expiry. So both the days I will be an option seller. And Wednesday also Nifty used to give premium decay. So Wednesday also I will be an option seller. So that's it. See, every recording will be available. Okay. The today's session is also recorded. Yesterday's session also recorded. Actually, it should upload automatically in the website. Yesterday, it did not upload automatically. So I don't know what was the issue. So I will try. Tomorrow I will check with my team and then I will ask why it did not upload. Hopefully, it will be saved in cloud or hopefully it will be saved in my system. So we will upload the recording very soon. See, you no need to no need to divide your money for buying and selling. Just follow 1% risk and take your position accordingly and keep your stop loss in mind. Let's say you are going to buy options and your stop loss is 30 points. Based on your stop loss, you have to take your quantity. You should not you should not take quantity for the entire capital. Blindly, you should not take. Calculate your stop loss and then you have to take. See, if you are a successful option seller, you will be a successful option buyer also. Madhavan, this is my personal advice. I have seen this personally. If you are a successful option seller, you will be a successful option buyer also. After doing option selling, option buying becomes more easy and more. Uh, it will be like a cakewalk. It will be very easy. Option buying will be very easy. See, I have tried at the money option selling and I have got hit. So at the money option selling, I have tried and I have got hit. So uh, that you should not do. Probably see, at the money option selling you can do once you have made for more than 4% in that particular month. Okay, so once you are sitting with 4-5% in that month, okay, you can try some. You can take few risky trades and you can compromise on your profits. See, what is my advice? See, my only advice is look at your capital in terms of percentage. Look at your profits in terms of percentage. Look at your losses in terms of percentage. This is actually a secret which nobody will tell you. Nobody will teach you this. This is a one line advice. Look at your capital and P&L in terms of percentage. That's all. This is actually a secret. Okay, the moment you start looking at your capital P&L in terms of percentage, your life will change as a trader. So please start focusing from tomorrow in terms of percentage. See, Bank Nifty is having only monthly expiry. Bank Nifty is not having weekly expiry. It is having only monthly expiry. So only we are trading in the last week of the month because because there will be a monthly expiry, so we can trade. How many high probable trades in a year we can get? See, again, it is subjective. In a month, maybe you can expect out of 20 trading days, maybe you can expect 5 high probable trades. So out of 25 you are getting, so which is almost 25 percentage. Okay, so there are 25 percentage chances you will get a high probable trade. Okay, this risk reward and how to calculate your profit based on deployed capital. Let's keep it simple. Forget about deployed capital. Okay, forget about deployed capital. Consider your entire capital. So let's say you are starting with 10 lakh. Okay, for example, you have to start with the 10 lakh capital. It's a standard capital size for option selling. So let's say you are starting with 10 lakh capital. Okay, out of 10 lakh capital, whatever profits you make, whatever losses you make, try to see in percentage terms for the entire 10 lakh capital. So forget about capital deployed. Okay, whether you are taking position only for 1 lakh, whether you are taking position only for 3 lakhs, doesn't matter. Calculate your P&L for the entire 10 lakh. Let's keep it simple. See, if any of the setup is confusing for you, please don't take the trade. Even now, there are days where the market will confuse me in the morning. So what I will do, I will not take any trade. Till 11 o'clock, 11:30, I will not take any trade. After 11:30, slowly I will understand the trend and then only I will take a trade. So even I am facing difficulty in live market. At sometimes the market throws some difficult setups. Okay. At sometimes there will be some spikes, there will be some injections. and there will be some losses. So you have to understand, if the setup is confusing, if the setup is not proper, don't enter. That is the only advice. Don't forcefully take any trade. Forcefully, you should not take any trade. Okay, take the trade only if you are 100% sure about it. All right, guys, we can go for a 10-15 minutes break, and then we will come back. So the time is 4:05. We will be back at 4:20. So we will have another 1 hour time where we can discuss more about we can take your questions, and if you want any other small doubts, we can clarify it. And please remember, there is doubts clearing session for 3 weeks, so you no need to worry. If you even if you are having if you even if you don't have any questions right now, you can come back and you can ask in the doubts clearing session. Okay, so right now we will go for a 15 minutes break. You can go through the charts, you can go through all the concepts which we have covered yesterday and today, and you can throw your questions after the tea break. Okay, so let's go for a break and come back. So here, please avoid taking trades here. We need 20 and 50 SMA like that. Even for lesser position sizing, I think you avoid in future. We need 20, 50 like this, but here the 20 and 50 is very far away. So try to avoid if the candles are far away from moving averages. So probably you can easily sell calls. See, recording will be available in another 1 or 2 days. So once the recording is uploaded, I will put a message in the Telegram channel. Okay. Yes, after below R1 CPR attract is possible. You can follow CPR attract candle once the candle closes below R1 in previous day high. So here you can follow CPR attract candle. So in this candle, you can sell call. Look at this day, it is Friday. On 25th April, it is a Friday. So you should be an option buyer. I have already said. So 25th April, you should be an option buyer. You have to buy put options. So 29th, it is easy to trade, no? Market is above CPR, market is above 200 SMA. So try to sell put options. More than selling call option, try to sell put option because the market is above CPR and above 200. So you have to focus on selling put options. See, when you are applying the CPR attract candle, make sure the gap is bigger. Again, in this small area, you can apply CPR attract, but it is a dead sideways market. So if you see here both the times the CPR has attracted the candle, and moreover there is no white CPR like 29th. In on 29th, the distance between CPR is very big. So you can apply CPR attract candle, but try to reduce your position. Venkatachalam option selling only in out of the money. Okay, explain Bank Nifty. I will show you one example for Bank Nifty. I will show you last month. The beauty of option selling in Bank Nifty is the premium will be high. So easily we can try to sell 100 rupee premium. The premiums will be high. Okay, so on 29th May, let's try how option selling has worked. So first of all, let's try to understand the trend. Okay, so you can see the second candle, it came below R1 and previous day high. After that, the candles were rejecting R1 and previous day high. The candle reached the CPR. Okay, and then once again the market was rejecting previous day high, and then the CPR was broken. So remember, we are having a narrow CPR. So comparing with the previous day, on 29th the CPR is narrow. So you can consider 29 as a narrow CPR. Okay, and the market is below CPR. Candles are below CPR. So as I said, as I already said, when you are doing option selling, wait for the market till 10 o'clock, 10:30, or even till 11 o'clock. Then only you have to take a trade. Now in this condition, this candle looks satisfying. 10-10 candle looks satisfying because already there are multiple rejections at R1 and previous day high. And the candle is coming below daily CPR. And moreover, the market is below all the moving averages also. So this this bear candle looks promising. We can go for a short in this bear candle itself. Okay. So this bear candle is convincing. So let me go to this particular candle, May 29. So let's go to new simulation. So May 29. So let me take a position at 10:15. Okay, so how to select a strike price? Coming back to strike price selection. So the market is below daily CPR and all the three moving averages. So probably I can select the market will not go above previous day high. Correct? So 55,500 should be a good strike price. If 55,500 premium is high, I can even go above and I can sell a deep OTM also. So depending upon the premium I can take. But technically, I feel the market will not go above previous day high because it has rejected already 2 times. So let us see 55,500 call option. So I am going to 55,500 call. So 55,500 call is available at 97 rupee. So it is a good premium. So what I can do is I can even go further. Okay, it's not mandatory for me to sell 55,500. So the more deep I go, the more safer it is for us as an option seller. So let me select 55,700 call. Let me sell 55,700 call. And let me buy a hedge. So 55,700 I have sold for 30. So probably it is expiry day. Is it expiry day? Yes. So it's expiry day, so we can buy a hedge for single digit. So 55,700 I have sold, probably 56,700, 100,000 strike away I can buy a hedge because it is a expiry day. So let me sell this. I have given buy. Okay, so this is the payoff graph for that particular strike. So let us see how the market went. So our target S1 and previous day low is reached around 11 o'clock. So let me go and see at 11 o'clock. So around 11 o'clock, 11:15, the market has moved well and it has given 1,000 points. So probably what we can do is we can book a profit at S1 previous day low, because if the market is coming for a pullback, then again we will lose this profit. Okay, so we sold a call option here. So now our target has reached at 11 o'clock. So what we will do, we will exit the trade. The market is trading below S1 and previous day low, as you can see. So we can sell a different strike price. Probably this time I can sell above CPR. So 55,400 or 55,400 should be good. So what I will do, I will book profit there and I will come to 55,400. It will not go above CPR. And if the premium is also huge, then it will be advantage for us. So let me book this at 24 and let me exit this also. Or there is no need to exit the hedge. We will move the selling leg alone. So I'm going to see 55,500. 500 or 55. Yes, 55,500 is at 30. It is available at 38 rupees. So 55,500 should be good. So let us recheck once again. 55,500. Yes, 55,500 or 55,400 is also good. 55,400, above 55,400 the market will not go, because this particular strike is at 55. CPR is at 55,400 only. So maybe we will select 55,400 and it is expiry day. So no problem for us. Let me sell 55,400. Okay. So now let's check once again. So around 11:15, we have sold 55,400. In this candle, we have sold the 55,400 call option. So again, this call option has hit our target around 12:35, 12:40. So let us go to 12:35, 12:40. The premium is high. How come? Am I making any mistake? Physics on and to. The premium has not decayed. How? Okay, sorry. Let me go. Okay, now only the premium is decaying. So we sold 55,400. This is what we were talking about earlier. So one of the guy was asking this question. The market is going down, but the premium is not decaying. So this is a good example. See here, uh, we sold 55,400 call option exactly at this candle. Now the time is 12:40. Almost we are waiting in this trade for 1.5 hours, but the premium did not decay. Did you see? So it means that the trend is going to reverse. So see here, even just before 5 minutes, see here, the time is 12:35. The time is 12:35. Okay, we have sold 55,400 call at 48 rupees, but the premium did not decay. We sold around S1 and right now the prices are at S2, but the premium did not decay. So it means the trend is going to reverse. It means the trend is going to reverse. So you have to exit the trade. This can happen for call option also, it can happen for put option also. So the market is going down, you are selling call option, but the premium is not decaying. So it means the market is going to reverse. Similarly, the market is going up, you are selling put option, but the premium is not decaying. So it is a sign of market is going to reverse. Okay. So please note down this point in your diary. Kindly note it down in your diary. Okay. Especially on expiry day. This you can observe on expiry day. So that is what happened, and you can quickly see the reversal. The market started to reverse strongly. Now, when we will take a counter position, like when we will apply this CPR attract candle trick. Now let me close that position around 12:35. So 12:40, 12:35, we will exit the position. Let me exit that position around 12:40. So the time is 12:40. Let me exit this position at 36. Okay, it is not decaying. So only 8 points, only hardly 12 points we have got decay. So there is no use of holding this position. So I will say exit this also. So it is around 3 rupee. So we have closed this position. Now now I am ready to sell put options. Okay, so what we can do is, when we can sell put options, we can sell put options once the market comes above S1 and previous day low. So we can easily apply a CPR attract candle logic and we can sell it. But please remember, the the market is below 200 SMA. Okay, so take care of your position sizing. The market is reversing from S2. The market is coming above S1. So CPR attract candle, the chances of reaching CPR is high. And moreover, the candles are above 2050 SMA. So remember, whenever the market is breaking 20 and 50, it means the trend is going to change. If 20 and 50 are having energy, the market will go down. I have already said that. So again, you can see here the market is reversing. The 2050 is reversing and then the market is going up. So we will sell put options once the market is above S1 and previous day low. The moment 20 and 50 is broken on the upside, the market is not interested to go down, the market will go up. Okay, so we can apply CPR attract candle trick and we are going to sell put option. The market is below 200, so reduce your quantity size. Don't increase your quantities. Okay, so what we will do, around 150, we will go for selling puts. Okay, so now again, how we will select a strike price? Technically, we have to select a strike price saying that the market will not go below S2. And that is the day low for that particular day. Okay, if the premium is good, you can select 55,000 put option. You can sell 55,000 put option. If not, you have to select 5,500, or if not, you have to select 55,200. Okay, so let us see 55 to 55,200, and the time is 150. So let me come to 150. So the time is 150. So let us open option chain. Let us try to sell puts. So 55,000. The premium is 9 rupee. So I'm not interested. So 5,500, 55,200. The spot is at 55,200. Okay, the spot is at 55,200. So let me select 5,500. One strike OTM. So let me select 17 rupee. Let me sell this and let me buy a hedge which is at 1 or 2 rupee. So 54,500 I will buy. Okay. So probably now we will check. Now where is the stop loss? So I am taking a trade at this particular candle. My stop loss is below 20 SMA, 50 SMA, below S1 and previous day low. So in the next two candle, my stop loss is getting it. So at 150, I'm selling puts, and at 2 o'clock, I'm exiting my puts. So let's see. Okay, so at 2 o'clock, I'm exiting my puts. Let's see how the premium has increased, whether the premium has increased or not. Let's see. See, the time is 2 o'clock, but the put premiums did not increase. See, the put premiums did not increase. That shows the market is decaying. Okay. On the other hand, if you see call option, in the morning we sold call option, the premiums were increasing. The premiums did not decay. That is a sign of trend reversal. But here we have sold puts, the market is going down, but still the premium is not increasing. So it is a clear sign that the premium is going to decay. So still, if you want, you can exit this trade based on the stop loss logic. The market came below to, S1 and previous day low, so you can exit based on the stop loss logic. So let me exit this trade based on the stop loss logic. So it is around the same buying price 17. Okay, and again it is same at the same price around 1.9. So let me exit based on the stop loss logic. Now again the market is coming above. Now again the market is coming above S1 previous day low. Probably here once again you can go for a selling puts. Okay, so maybe let's select 240, 240 to 255. In these areas you can sell puts. So let me go to 240 and let me sell a put option. So 50, again the same puts we will sell 5500 or 55200 based on the premium. So let me come to 240. So let's go to 240. What happened at 240? Let me open the option chain. So let's see what happened to 5500. So now 5500 put is at 8 rupee. It has decayed. So let me select 55200 put. So let me sell 55200 put. And let me buy a hedge which is around 1 rupee. So 54800. Let me buy. Okay, so now let's see. So this is how my payoff graph looks like. So now I have sold at 25 rupees. So let's see how the market goes. Let me move 5 minutes. See, in the next 5 minutes at 245, there was a strong bear candle, but the premium did not increase. See, at 245, technically there is a bear candle. Our stop loss is hit. We have to exit manually. We have to book our stop loss, but the premiums did not increase. Okay, the premium did not increase. So maybe let's see another 5 minutes. Okay. So yes, so here the premium is increasing. You can exit. You can book your stop loss and you can exit. So probably at the closing of this candle, 450, 455, the premium is increasing slightly. So you can book your stop loss. Again, let's run another 5 minutes. See, in another 5 minutes, the premium decay is drastically happening. Look at this. So here the premium was around 33 and in the next candle, the premium is at 17 rupee, a volatile expiry. Okay. So even if you have booked your stop loss, your loss would have been somewhere around, it have gone from your profits. So here you are selling at 25, here the price is 33. So hardly, if you want, you can wait or you can exit. The stop loss is going from your existing profits only, so not an issue. So if you book, you can book, or you can hold on, you can hold on. Okay. But if you continue to hold on to this trade, after that decay, because the market has rallied like anything. So this is what happened on uh, monthly expiry. So I remember this monthly expiry. I was making money in the morning itself because I was selling call here itself. I was selling calls here, and below CPR I was selling calls here. Here also I was selling calls here. Okay. So it was a easy day. So it's not a difficult day, it's a easy day only. By looking at this tremendous move, don't get scared because it's the expiry day, so the premiums will hardly move. The premiums will hardly move. So this is how you trade in Bank Nifty. The strike price selection is completely based on the levels, CPR and moving average levels. At the same time, the premium should be sufficient for us. Okay. The 50 rupees premium should be sufficient in Bank Nifty, especially with Bank Nifty. That 30 to 50 should be sufficient because the lot size is 20. So if I'm selling a 30 points, it should be sufficient. It should be sufficient. Even if I take 5 lots. Yes, 50. Anything less than 50 rupees premium should be fine in Bank Nifty. No, on expiry day, strictly no option buying. On expiry day, strictly no option buying because the premium will increase and the next candle the premium will decrease. So you will end up losing money. So avoid option buying on expiry day. May 12, 13, 14. So this is Monday. So probably I will not sell put options because the market is far above R4. So definitely I will not sell put option. I will go for option buying only. So whenever the market is above R4 or whenever the market is below S4, don't sell options because the market is highly volatile, highly trending. So you have to follow the trend. You have to stay with the trend. You can take options buying. And also it is a Monday. So you have to go for option buying in this particular day. Maybe on 13th you can go for option selling. Okay, probably you can go for option selling below CPR. Below CPR. Below CPR you can go for option selling, and that too the strike price should be based on the previous day high. I think the premium should be there on 13th May. Let us quickly check whether the premium is good on 13th May in Nifty. So let me go to Nifty, and the expiry should be on 15th May. So let me go to 13th May. The premium should be good. The time is somewhere around 2 o'clock, I guess. Sorry, 12:50, 12:40 to 12:50 is the timing. So let me go to 12:40 or 12:50. So my strike price is based on previous day high, so which is around 25,000. 25,000 should be my strike price. If the premium is not there, then I should go for 24,800. So I should go for 25,000, or I should go for top CPR 24,800, because my entry is here. So the market cannot go above 20, cannot go above 50, cannot go above CPR. The chances are very less. So 24,800 or 25,000 should be the ideal strike prices. Let's decide based on the premium as well. 25,000. So 25,000, the premium is at 57. It's good. It's good to take 57 rupees per. So 25,000 itself we can select. So let me sell 25,000. And let me buy a premium which is equal to that, which is half of that. So 58, 2, 4, 24. So probably I can buy 25, 200 or 25, 200 I can buy off of it. Okay, so this is the trade in Nifty. Now let me run till 3:30. So we have taken the entry here. So probably let me run till 3:30 and let's see whether the decay has happened or not. Let me run 30 minutes. So almost you got half of what is shown. Maybe if you have so maybe if you have deployed for 10 lakhs, if you have deployed 10 lots, probably you would have made 11,000. Or if you have taken 5 lots, 5,000, which is 0.5 percentage, still it's good. So premium is there, premium is good. And if you are carry forwarding the position, then the next day you have to exit in the first 2-3 candle itself, because it is a bull candle. Let's say you are carry forwarding the position, assuming it will gap down or trusting some of your luck. See, at 9:20 you have to run away. You are still in profit, run away. Book your profit and run away. Okay, the premium has not decayed much. You are still in a small profit, you have to run away. So the premium is good on 13th May. And on 5th and 14th May also the same logic you will apply for option selling. Okay. Probably you can sell options below the CPR. So the same logic, the market will not go above CPR or the market will not go above R1. So you can select any of the two strike prices. The moment you see a bull candle above inside CPR, or the moment you see a bull candle above 20, you just exit. If the premium is not increasing, then no problem. You can wait till 3:30. If the premium is increasing, if the premium is not decaying, exit manually. Clear, everybody? We have seen a lot of examples. I hope it's clear. I hope it should be clear. Any other questions? Any other question, guys? Feel free to ask. No, Rajkumar, what happens? No, it will hit your stop loss. The premium will increase drastically. Maybe you can give a try. See, when you are taking a trade, this OA helps you. Uh, it gives you some additional confirmation. That's it. Now, let's say, for example, we were discussing about this. We were discussing about May 13, selling call options. So let me go to OA statistics on May 13. Okay. So let me go to May 13. So we are selling options around, we are selling options around 1250, right? Around 1250. So let me go to 1250. And again, it is bank Nifty. So sorry, sir, it's Nifty only. Okay. So Nifty 1250. Let's see. So 1250 we are selling 25,000 call option. So you can see people have sold 25,000 call option only higher. The most number of call options has been sold at 25,000 only. So it gives you some clue, and this trending OA also helps during the market time. You can see more people have sold call option. 2 crore people have sold call option. Okay, the change in call away. 2 crore people, new people have sold call option, whereas people are exiting put option. So minus 29 lakh means people are exiting the put option and people are selling more call option. So this also helps, guys. This trending OA will show you the direction. It will show you the direction. So we are also having a bearish bias. Below CPR, we are having a bearish bias and we are planning to sell call option. At the same time, the trending OA is also showing you the direction it is bearish. And you can see more people are selling 2 crore call options, people are selling. But here people are exiting the put option. Minus means exiting. People are not selling puts, people are exiting the puts. So this trending OA and OA statistics, both of this I used to check in live market. I have the habit of checking both this in live market. Okay. So this OA statistics and trending OA you can see in fires. Easily you can see in fires. Maybe if you are interested in opening an account with fires, you can open using this link. I will share the link. You can open your account with fires. Fires is, I love fires for various reasons. I've been using fires since 2018. So since 2018, I am using fires because of the trading view terminal, and I'm used to it. So apart from that, this put call ratio, I never look at this PCR ratio. This options chart, I never look at that. Okay, so this OS statistics, where people have sold more call option, where people have sold more put option, for that I will see. Especially it helps on expiry day. So let me show you on expiry day. So 15th May is the expiry. So let us check at 12 o'clock. So you will understand where more people have sold. Okay, so if you see on 15th, May, let me change the date. Yes. So you see on 15th May, on expiry day, people are selling more puts. We have not yet seen the 15th May chart. Not yet we have seen the 15th May chart, but by looking at this open interest itself, you can say the trend. More people have sold put options. Okay, whereas here the call option sellers are very less. People have sold call option there only. So slightly the market should have been bullish on that particular day. Let us go to 1 o'clock. maybe 13. So let us go to 1 o'clock. See, at 1 o'clock, everything has changed. Okay, you saw the drastic change. Because the market is bullish. At 12 o'clock, I said the market is bullish. Okay, without seeing the chart itself, I said. So that is what happened. By interpreting the OA also, again, it is it is experience. Okay, there is no secret. It is nothing but experience. Okay. And after 1 o'clock, you can see people have moved to 24/7/50. So this will help you to plan your trade. So once the market goes above at 1 o'clock, Nifty is trading above CPR and above R1 previous day high. See here. So now what you will do? You can sell put options. So the market will not go below CPR. You can start selling puts. So it gives you an idea where the people are moving. So right now people have sold 24/500 put option and 24/600 put option. So let's check after 30 minutes what happened. Okay, see the market has moved drastically and it has moved drastically towards the upside. So slowly you have to shift the strike prices. So earlier you would have short a 24/400 puts. So you have to shift from 24/400 to 24/500, then 600, then 700. As the market moves higher and higher, you have to exit your strike prices and you have to sell the. So earlier when the R1 was broken, you would have sold you would have sold a put option below CPR. Once the market comes above R2, sell a put option below previous day high. Okay. Once the market reaches R3, you sell a put option below R2. So like that you have to, because this is the expiry day. This is Thursday. This is the expiry day. So you can slowly move and you can make a lot of profits. So, so this OA statistics, everything, these things helps, especially on expiry day, because in live it will show you the direction. Now at this in the same way, check the trend at 12 o'clock and check the trend at 1 o'clock in trending OA. Okay. So at 12 o'clock, check the trending OA. So you can see the direction is a little bit mixed. Okay. The market is bullish, the market is bearish, the market is bullish, bearish, bullish. Okay, so and you can see here nearly 2 crore people are selling call and nearly 1 crore people are selling puts. So now let's see after 30 minutes what happened, or after 15 minutes, let's see what happened. Okay. So almost equally people have sold. Let's go another 15 minutes at 12:30. So the call people who are selling the calls are increasing. Puts are also slightly increasing. The trend is showing bearish. Till 12:30, the trend is showing bearish. Let us go to 12:45. Okay, now you can see the people are equal. Again, the people are equal in both call and put, neck to neck. But here you can see the trend is slightly showing upside. So let us go to 12 o'clock, 1 o'clock, and let's see. So now you can see at 1 o'clock. So what happened now? People are selling more puts. So you can see in call options, people sold 2 crore calls. They are slowly reducing the position, whereas people are increasing the put option positions. And the trend is showing that on the upside. So let us go another 15 minutes and let us see at 1:15 what happened. See, now you can see the trend. See, look at the direction. And look at the people who have sold puts. Okay, 2 crore. It is slowly increasing. See, right now it is at 3 crore, and here the people are reducing the puts. Understandable, easy. Everybody is clear. So see here, from 2 crore, people have exited and they have come to 1 crore. Here, from 2 crore, people have increased to 3 crore. Okay, and look at the direction. It is showing bullish. Understood? Understood, everyone? This is change in OI. New people are coming inside. New people are going out, new people are coming in. New people are going out, new people are coming in. Okay, now trending OA is showing you the direction, but you no need to focus more on trending OA. Exactly at this time, 12:45 to 110 or 115. You just look at our setup. Look at the candle and try to look at our setup. Okay, you will understand the direction easily. See here, from 12:45 till 115, by looking at CPR itself, you can say what is the direction. Understood? Based on our setup only, the OA is changing. See here, 20 and 50 is providing support for the candle. Okay, and the candles are coming above CPR. See, in the morning, the candles were taking support at S1 and previous day low. In the afternoon, candles are taking support at CPR. And after that, the candles are breaking R1 and previous day high. So slowly the market is taking off on the upside, like an aeroplane. Slowly the market is going up on the upside. Okay, 2050 is also giving support. The market is above CPR, above R1 and previous day high. CPR is very, very narrow. So it is a trending market. Now so this is the main criteria. This OA statistics and this trending OA will give you a confidence to take a trade. Okay, this is not compulsory to see. This is not a secret, or this is not compulsory to see. This is not at all a subject. I am just showing you in live market, when you see these things, it will give you the confidence. Okay, I'm guessing correctly. You will have that confidence. I'm guessing correctly. So my view is correct only. Like that, you will get the confidence. Understood? And here also you can see trending OA in chart structure also. So here call option and put option OA is sold equally. So both call and put are sold equally, around 2 crore. After that, suddenly more puts are sold and people are exiting the call option. So people are exiting call option. So the green color graph is coming down. People are selling more put option. So the red color graph is going up. Understood? In the morning, the market was going down. See, more call option sellers. Okay, less put option sellers, because the market is going down. You can see here. See, in the morning, the market was going down, correct? So more people sold call options, less people sold put option. But in the afternoon, the market started going up. More people sold put option, less people are selling call option. So this will give you the confidence. Appada, I am guessing correctly. I can take a trade. You will have that confidence. Clear, everybody? Again, it is not mandatory to see. If you want, you can see in live market. All right, guys, everybody is clear with whatever we covered today. So you are clear with the trend. How do you identify the trend? Please answer me. I don't know. Please answer me. We will wind up today's session. We will meet again in doubts clearing session. Okay, so how to identify the trend? I don't know. Please tell me. How to identify the trend? Everybody, please tell me. Yes, we can identify the trend based on Dow theory, higher high, higher low, higher high, higher low, and lower high, lower low. Then what is the next step? The next step is we follow CPR. Okay, above CPR, below CPR, below CPR. So whenever the market is above CPR, what kind of structure we need? Above CPR means we want 2050 to act as a support. And below CPR means we want 2050 to act as a resistance. So this is how we identify the trend. So if you are a conservative swing trader, you have to use daily chart with monthly CPR for conservative swing trading. And if you are a aggressive swing trader, why conservative swing trader? Conservative when you are doing conservative swing trading, daily chart and monthly CPR, the fluctuation will be less. You will not be in a tension. You will not be having any fear. So it is very, very good for beginners. Okay. If you are having some guts, then you can try aggressive swing trading. So for that, hourly chart with weekly CPR. Okay, you will use aggressive swing trade. Now, people who are already trading every day, okay, already into full-time trading, who is doing business, who is having a lot of time to look at the market, then you can do day trading. So the time frame will be 5 minutes chart with daily CPR for day trading. Okay, so this is clear, trend is clear. So entry exit is also clear. Always our entry is near CPR, near 20. Okay, near 20 SMA. Only then we will go for a 80% position sizing, which is basically a higher quantity, 80% position sizing. Okay. So if the market is not near CPR but near 20 SMA, if the market is near CPR but far away from 20 SMA, if there is no near CPR, no near 20 SMA, then you have to go for a less than 50% position sizing. Less than 50 position. If you see any other setup apart from this, if the market is far away from CPR, market is far away from 20. So in those kind of conditions, you can reduce your quantity. Okay, and 1% only you have to risk in a single day. Okay, 1% risk per day. Okay, you should not lose more than 4% in a month. Okay, so risk per day, 1% is risk per day and 4% risk per month. Okay, you should not lose more than 4% risk per day, per month. And another important point is trading journal. Okay, please maintain a trading journal. Maintain every day. Now let's say after 1 month, you are coming and telling me, there are a lot of people like that. A lot of people are like that. They will come after 1 year and they will tell me, sir, I am using your strategy for 1 year. This 1 year, I did not make profit. I did not make loss. Okay. Or they will say, I am losing money. Still, I am losing money. Still, I am not profitable. Okay. Now, how I will know where you are making mistakes? How I will know? Because I have not seen you. I don't know who you are. I don't know where are you from. I don't know what is your capital. I don't know what is your profession. So I don't know anything about you. You are simply coming and saying me, sir, I am losing every day. I took your course. I don't know what to do right now. I have lost 1 lakh of my money. I have lost 2 lakh of my money. If you are simply saying like this, what I will understand, please tell me. What I will understand, please tell me. I will not understand anything. I don't know. I don't know whether you are trading properly. I don't know whether you are trading in Nifty or Bank Nifty. I don't know whether you are trading in stocks. I don't know whether you are an option buyer or seller. I don't know whether you are entering at the right time or not. Okay, there are a lot of things. So, after 1 month or after 1 year, if you are coming to me, only when you submit your trading journal, I can understand who you are. Okay, so you should maintain your trading journal. Okay, which instrument you are trading and at what time you entered, what time you exited, what is your entry reason, what is your exit reason. Okay, you have to note down everything. Very simple trading journal. There is no template at all. Write down Nifty. Okay, Nifty, call option or put option, write call option. Okay, buying price. Okay, right, buying price like 100 at 100 rupees I bought, selling price 150 rupees I sold. How much profits? 50 points. What is the buying reason? Market is taking support at CPR above 20 SMA. What is the exit reason? Market reached the target R1, so I exited. That's all. So what is the lesson you learned in that particular day? I followed risk management correctly. I took only less position. I exited correctly. I entered correctly. Like that, you have to write in your simple words. There is no template at all. Every day you are trading. Every day write down in the trading journal. Only then after 1 year, if I see you, the first thing which I will ask is trading journal. You might have seen in the Telegram channel, right? Lifetime guidance. You saw, right? Lifetime guidance you saw, everybody saw. Lifetime guidance means, what it means is, even after 20 years, if you come and ask doubt to me, I will clear you. That is called as lifetime guidance. Even after 10 years, if you are coming to me and asking a doubt, I will tell you. So that is called as lifetime guidance. I am confidently giving lifetime guidance because I am confident, I can confidently say you people will not maintain trading journal. So after 1 year, you will come to me, you will ask a doubt. What I will ask is, give me a trading journal, I will ask. You people will not maintain a trading journal, so easily I will escape without giving any support. Understood? So it is easy for me to provide lifetime guidance because nobody will maintain trading journal. You understood the logic? Nobody will maintain the trading journal. So when you are telling me, sir, if you are telling me, sir, I am making profits, CPR has saved my capital, CPR has changed my life, I am making money from CPR, I am happy with CPR indicator, then okay, thank you. Thank you so much. Be happy, trade well. This is my advice. But if you are coming to me, sir, I am losing money every day. Okay, I am not profitable trader. I have lost 1 lakh rupee. I have lost 2 lakh rupee. Then what I will say? Submit your trading journal. But nobody will maintain trading journal, so it is easy for me to tell lifetime support, because you have to maintain trading journal. Then only I can understand what mistakes you are doing. Only then I can rectify your mistakes. You got it right? Everybody got it? Only when you maintain a trading journal, I can understand your mistakes. What I will do is, when you submit your trading journal, what I will do, I will fill, you will submit in Excel sheet. You have to submit your trading journal in Excel sheet. What I will do is, I will add filter. I will take all your losing trades. I will check the time. I will check the chart. I will check the entry exit. I will check with the charts time. Most of the time your entry will be at the wrong location at the wrong time, and most of the time your exit will be at the wrong time and wrong location. So it will be easy for me to verify the trading journal. Understood, right? So only a trading journal, because most of the people will make mistakes at entry and exit only. There will not be any entry, but people would have entered. The stop loss, you have to exit at this particular level. A bear, the market is going up. A bear candle closed below CPR. You have to exit, but you will not exit. You will wait. Then suddenly a bear candle comes and you will lose a big money. So these kind of common entry exit mistakes will happen for everybody. I can understand that only from your trading journal. There are many people, they will come to me and they will say, sir, that day the market went above CPR. 2050 was like that. Okay, the candle was having a rejection. Okay, the call option was at for 35 rupees. I bought at 35 rupees. Okay, then I sold. I kept the target at R1. The target was 70 rupees in options, but my stop loss at 20 points was hit. Now will you understand anything if I say orally like this? Will you understand anything if I am saying orally like this? Now what to do? How to exit? How to book my profit if somebody asks like this orally? How I will help? Please tell me. So if you are asking your doubts orally, if you are asking your mistakes orally, nobody will understand. Only your trading journal can help me to understand. In uh, in school and colleges, how will you judge a brilliant student? You will ask for the report card, correct? You will ask for the mark sheet. Go to a school, want to know who is the topper of the school, ask the grade sheet. Go to a college, you want to know who is the brilliant student, ask for the mark sheet, ask for the consolidated mark sheet, correct? So same way, you want to know who is a profitable trader, we want to verify the trading journal. Every day you have to maintain the trading journal. Until you become a profitable full-time trader, you have to maintain a trading journal. I stopped maintaining my trading journal in 2022. Until 2022, I was maintaining a trading journal every day. I used to, you no need to type a very long paragraph. A single keyword is enough. Wrong entry. Entry time is wrong. Exit time is wrong. Stop loss is big. These kind of small keyword is enough. Till 2022, I was maintaining a trading journal. From 2018 to 2022. Just imagine, 5 years I was maintaining a trading journal in Excel sheet. Every day I used to maintain. Because in mobile itself, you can easily write down. In mobile itself, Google Sheets, you can easily type. Easy work. It will take hardly 2-3 minutes only. After 2022 only, I stopped maintaining a trading journal. Now tell me, how many of you are maintaining trading journal for more than 3 years? Or how many of you are maintaining trading journal for more than 1 year? See, that shows your hard work, and that shows your hard work, that shows your passion for the particular field. You got my point? When you are doing a business, you will maintain all the bills, all the incomes, all the expenses, staff salary, electricity bill, miscellaneous expenses, travel expenses. You will maintain everything in a business. But in trading, we are not maintaining. In trading, you are not maintaining. See, trading is a business. You have to maintain all your incomes, expenses, okay, which trade you take, why you made profit also you have to enter. I made profit because I entered at the right time. I exited at the right time. My entry and exit was what was right. My position sizing was right. Why you made loss, you have to enter. Only then we can understand what is your strength and what is your weakness. Your strength and weakness we can study from your trading journal. At some point of time, what happens? Every day you will maintain a trading journal. Everything will sit in your mind. Okay, you will become a profitable trader, and there comes a saturation point. Enough. Hereafter, we no need to maintain a trading journal. So that saturation point should come for you. So it will take at least 3 years, 3 to 5 years to reach that saturation point to stop maintaining a trading journal. Clear? So trading journal is compulsory. Only then I can understand your mistakes. Only if I understand your mistakes, I can easily rectify you. Easily I can correct your mistakes. And I want everybody to be a profitable trader. I will go to any extreme level to make you all a profitable trader, but you should be ready to come along with me. If you are lazy, if you are lazy and if you are not having time, if you are happy with your current job, if you are happy with your salary, I cannot help. I want you all to ask me questions every day. I want you all to trade every day. I want you all to clarify all your doubts now and then. I want everybody to make a profitable trader. That is the biggest blessings for me. You will become a profitable trader. You will make a lot of money. You will keep your family happy and comfortable. You will spend more time with your family. Correct? It is a blessing for you, and as a mentor, it is a blessing for me as well. I need that blessing. I badly need that blessings. I am in need of a lot of blessings. So I badly want everybody to become a profitable trader. I am not teaching a unnecessary strategy. I am not teaching a strategy which is uh, which is uh, which is easily available in internet or not. Whatever I am following personally, I have covered. And there are a lot of old students who are joining this session. I have never changed my strategy completely. Today teaching about RSI, tomorrow teaching about CPR, another day talking about super trend, another day talking about some other indicator. I have never changed my CPR and moving average strategy. Only the entry location, only the entry and exit location I have changed. Because the market is changing. So at least we have to change that. Only the entry exit location we have changed. Apart from that, the core strategies we never changed. Okay. So whatever I am following, I am teaching. Okay. And again, uh, after 9 months, I'm conducting this webinar only because you people were asking for webinar for a very long time. If nobody is asking, I'm not going to do. Many people are asking me, so I am doing. And as I said, this will be the first webinar of 2025 and this will be the last webinar for 2025. Next batch is on next year only. Because honestly, I don't have time. Okay, honestly, I don't have time for webinar preparation. Honestly, I don't have time for PPT for PPT also. See, yesterday and today, I did not share you any PPT. Okay, whichever I shared in the event, I shared. That's all. For this webinar, I did not even prepare presentation because honestly, I don't have any time. From morning 8 o'clock till 3:30 till 4 o'clock, the time is going for trading. See, today from morning till evening, I am speaking. Okay, so my energy is getting exhausted. After that I want to take some rest. I want to spend some time with my family. So same way, every day from morning 8 to 4 o'clock, we are sitting in one place, we are sitting in the chair, we are doing trading. Lot of emotions are going on. After 3:34 only, we will become free. After that only, we have to plan our other schedules. We have to check our emails, we have to go out, we have to spend some time with family, we have to discuss about the trades with our friends and colleagues. So till 6 p.m., 7 p.m., totally occupied. Uh, after that, I'm coming from office to home. It is taking 1 hour, 1 hour, 1.5 hours. It's taking because of traffic. I have to cross Chennai airport. I have to cross Gindi. So 1 hour it is taking to reach my place. So just imagine how much tired every day we used to be. So morning 1 hour travel, evening 1 hour travel. So 6, 7 hours we are sitting in front of the screen. Honestly, we don't have any time. And Saturday, Sunday is going for some other activities, busy activities. Okay, so honestly, there is no time. It is easy to take webinar every week, but we don't have time. And that is not the that is not we want to do. We don't want to take webinar every week because because basically I'm a trader. I love to trade. I love to trade. That is what I will say. If you ask me to trade 24 hours, I will trade. But if you ask me to teach 24 hours, I cannot. Okay? Because to teach to a lot of people, I need to put a lot of effort. How I can simplify the concepts, how I can make the people understand the concepts. A lot of effort is involved. Just for namesake, I cannot come and teach and I cannot go. A lot of preparation is also needed. Yes, Chandrasekhar, your answer is correct. So, see, honestly, what I will say is, uh, books will really not help you to become a profitable trader. Maybe if you want to learn any new strategies, you can learn any books. You can read any books. If you want to become a proper successful trader, then you have to trade every day. You have to trade every day. Trade every day. That is the biggest thing you can do. Trading every day will help you to understand a lot of things. How to control your emotion? Again, see, your emotion is tied to your position sizing. You are taking huge position, you are losing a lot of money, and your emotion is getting affected. You are taking a less position, you are losing less money, your emotion is not affected. Honestly, your emotion is tied to your position sizing only. That's why we have categorized high probable trade and low probable trade. This high probable trade and low probable trade will help you to manage your emotions. Once your position sizing is under control, when your position sizing is in your control, your emotion is automatically in control. Clear? So, uh, we are done with this 2 days webinar. I hope you all enjoyed this 2 days webinar. I hope you all understood a lot of uh, new things, a new dimension of looking at the market. I hope you all understood that. And more importantly, I hope you remember the role of 200 SMA. The role of 200 SMA is very, very important because it is the powerhouse. It gives energy for 2050. And 2050 gets energy from 200 and it gives energy to the candles. And then only the candles are moving. If the candles are moving without 2050, then most likely the candles will stop there or the candles will reverse. Okay, so you can go and backtest a lot of charts. So this week, Monday to Friday, if you are confident enough, then you can take live trades and you can experience it. If you are not confident enough, then observe in live market how the market is moving, how the market is uh, respecting our levels and setups. You can observe that in live market. Okay, and next Saturday or Sunday we will plan for a doubts clearing session. Okay, before before joining the doubts clearing session next week, please go through hundreds of charts. The more you look at the charts, the more you understand. So backtest a lot of charts manually. Give lot of work to your eyes. The more you look at the patterns, the pattern get registered in your brain. So next time when the pattern happens, you will be prepared to take the position. Okay. So thank you guys. Thank you for joining this 2 days webinar. Don't worry, all your queries will be answered through WhatsApp. We are having, the good news is we are having 3 doubts clearing session for 3 weekends. Okay, so don't worry. I want you all to make as a profitable trader. If you are ready to become a profitable trader, if you are ready to put in all your work, put in all your efforts, then I'm 100% confident I will make you as a profitable trader. Okay. So thank you guys. Thank you for joining this 2 days webinar. Thank you for trusting me. Okay. Still, I wanted to give a lot of knowledge. Still, I wanted to share a lot of experience with you all. So I will all keep you posted in Telegram channel. Okay. Thank you guys. Bye. Let's meet next week. Thank you. Thank you. Bye.